Ika, can you allow me control here? Request for control.
I gave you the control already.
Yeah. Okay. Okay. Yeah.
Can you move?
It's like can't move. Okay. Take
Just now, can
control.
I?
Yeah.
Are you requesting for control again?
Yeah.
Yeah. Okay. But now?
Okay.
Okay.
All right. Okay. All right. Good morning. All business partner, agents, Sompo. All right. My apologies for this technical error. So luckily managed to get it fixed. Even though you're about 5 minutes late. All right. Before I start the session, just to make sure that technically everything's okay. Give me a heads up. Can you hear me loud and clear? Just give me an okay sign, loud and clear. Everyone? Okay, good. All right, number two, you can see the slides in front of your screen. So, Ika, so in between, if let's say if the control doesn't work, then you may need to help me to move the slides. Okay.
Okay.
Right. The third thing is that the camera, I don't know for what reason my camera cannot on, so you can't really see me. But anyway, as long as you can hear me loud and clear from your end, I think that should be fine. Again, I think most of you already more or less have seen me before. So for today's session, my camera is not working. Okay. Right. The other thing is that for this training, you know this conlaws is going to be quite technical, right? So if you do have any question that you may want to ask me, please feel free to do so in the chat box. So just type in your queries and so on. So what I'll do is that the minute I finish one of the slides, if there's any question, then I will address it immediately rather than I'll wait until the end of the session. But if you wish to speak, which is better, you don't have to waste too much time writing. You can speak through your microphone, but please make sure after speaking, please do remember to off your microphone. All right. Then for the rest, we'll re-log in. Please double check that your microphone is muted because we do not want any interruption in between the session. All right. So towards the end of the session, we may have another 5 or 10 minutes, which I will open up for any further Q&A. So if you've got any other question that was earlier that you wanted to ask, but you have maybe overlooked at that time, you can post it again towards the end. All right. Okay, so the training materials, as usual, this will be given to you after the end of training. So in between the slides, I do have quite a lot of those like Q&A, those like multiple choice question. So I hope every one of you take this opportunity to input your answers. If you can get it right, I mean, that's good. But if you don't get the answer right, no worries. We'll be here to make sure that you get the right answers before you leave this session. All right, so it's all good.
Sorry, Stephen. On the slides, I've actually shared to their marketeers, but I hidden out all the answers for you have mentioned.
Echo, I can hear a lot of echoes. Okay.
Echo, hold on. Okay. Right. So for the slides itself, I've actually shared it over to the marketeers. And
okay.
they have a copy of they should be
already
having a
got it
copy
now.
of the training materials already. So
All right.
if you guys can just reach out to your marketeers. If you don't have, just reach out to your marketeers for the copy of the training materials. But the answers have been hidden out, so they don't have the answers for the questions.
Okay. Better without answer, because you answer, then you don't use your thinking capability.
Exactly.
Okay, let's move on this connos. Right, this is another interesting topic. Right, so I want to encourage all agents. Many of you have already sold the 5-year policy, but I understand that a lot of agents actually they don't sell connos. So when I ask a lot of agents, why are you not selling connos? First thing first, they are not very sure, especially on the sum insured, things like that. So today I just want to share with every one of you how are you going to market these condos in a simple manner. Don't have to be too technical. All right. So as long as you can speak the layman language and so on, your client understood, then I think it's easy for you to market this product. All right. Okay. boleh. So Ika, you need to help me to go to the next slide. Not moving, huh? Okay, it's not moving. Okay, oh, very slow, huh? I'm gonna wait for the slide to move. It's not moving. Ika, you help me to move the slides. Next.
I already moved to the third.
Okay, next one. I'll go to the next one. I can't. Okay.
Can you hear me?
Can.
Okay.
I can't control from here already. Cannot move already. Okay, next. Okay, so I'm going to share with you. After this, then when I say next, you move on. Can
Okay.
So for today, you got to be my PA lah. Okay. So anyway, I'll leave the control to you. Kalau boleh. So I say next, then you go next. All right. So for this session, I'm going to share with you the correlation between the fire and the con loss. So take note. When you're going to sell these con loss, you need to have a fire policy. Okay, so you cannot just sell a con loss without a fire. All right, so let's move on to the next slide. Okay, next. Okay, good. You tekan the first one. Show the answer, the first one. Okay, for this one, so take note, fire you can sell as a standalone policy.
Can you move your cursor to the other side a bit? Okay.
Boleh. Yes, honey. All right. So most of you have already sold a fire policy, okay, that's good. But at the same time, take this opportunity to also try to market this con loss. So I mentioned here for con loss, it must be accompanied by a material damage policy. Now, material damage not necessary is just only a fire policy. Even if you're talking about like all risk policy, all risk policy can also go with the con loss because all risk we also cover the fire element, we cover the theft element, and we also cover the accidental damage element. So if let's say your machinery, you insure under the machinery all risk policy. So if there is a fire that causes damage to the machinery and that one triggers that interruption, then your con loss will trigger. Okay, but if you're talking about due to a theft or due to accidental damage, that one will not trigger the con loss policy. Okay, it's only the fire that will trigger the con loss under your all risk policy. Okay, got it? So that's the first one. All right, next one. Okay, as far as the fire is concerned, you know that the coverage here is the very basic one, fire, lightning, and domestic explosion. So that is the basic cover. Your con loss will follow suit. So the minute if there's any fire that causes interruption to your business, so the con loss policy will also trigger. Then likewise, if there's a lightning or the domestic explosion that triggers the interruption, then your con loss follows suit. All right. So whatever premium that we charge under the fire will also be charged to your con loss. That's why I encourage the con loss, because sometimes the premium for con loss can be like 3 times, 4 times, even 5 times higher. Let's say if the fire premium is like 10,000, sometimes your con loss can be like 50,000. It depending on the nature of business. Let's say, example, if this is a service industry. Now, let's say like a company, maybe they have a lot of these IT laptops. So all these laptops, most likely they will insure under the all risk policy. So maybe that all these the sum insured could be say like about 2-3 million. But in terms of the business they generated, can be like 100 of million, So the premium could be huge. All right, so turn on that. Okay, so you can see the perils at the bottom here. Now, if your fire, you also add in all the other perils, like your flood, storm, and so on. These perils will also follow your con loss. So let's say tomorrow, if there's any flood, any storm damage, and so on, causes interruption to the business, then the con loss will also trigger. And also take note, whatever premium we charge under your fire plus your perils, that whole rate now will also apply to your con loss. Okay, now on the right hand side, you can see the con loss also have its own group of extension. You can see like the public utilities supply extension. These are another what called a separate extension, strictly only for con loss. And one of the selling point is actually all this extension. All these supplier public extension, we are talking about other people premises, So that means to say is if any fire happens at the public utilities, happen at the supplier premises, causes the business to be interrupted, the con loss will also trigger. Even though the insured's own location, even there's no fire, it will still trigger the con loss. That's provided you add in all this extension, which I will go through with you as we move on. All right. The next one, you can see that for fire, we cover all the tangibles, that means all the building, machineries, and so on. These are more to the physical damage to the assets. Now, con loss, we're talking about the financial aspect. Okay, fire is more to the physical damage, whereas the con loss, we're talking about the financial losses arising from the interruption to the business. So these financial losses, we are talking about the gross profit, the gross revenue, as well as the gross rental. All right. Okay. Next. Okay, for the assets, usually the sum insured, we will actually base on the reinstatement value, or we usually base on the market value, something that we can actually quantify. Okay. Now for con loss, let's move on to the next one. Okay, con loss, usually we will look at the financial figure based on the past year's annual report. If possible, if you can get the last 3 years annual report, it will give us maybe some indication whether the business is like gradually improving, or whether it's stagnant, or whether it's downhill. So we can actually track the trend, okay, whether like for this year or the last year and so on, whether the trend is going to be increased like 10% or 15%, we can look back from that annual report. Okay. Now for the con loss, normally we only use the estimated sum insured based on the past. So if you take the last 3 years annual report, we will take that as the indication. Then we will add in some adjustment for the latest trend and so and so. So con loss is only estimated. So even if you over insure the con loss, it's okay, because towards the end of the year, when they declare the actual gross profit to us, then we will do some adjustment, and then we will adjust the premium accordingly. So if we have already over insured at the beginning, so towards the end, there will be some refund as well. All right. Now, con loss is okay to over insure, but not grossly over-insured. So let's say if the figures are supposed to be like 3 million, don't go and insure 6 million, right? So that will be grossly over-insured. And another good thing about con loss, now if you insure only the fire without the con loss, insurer of course may take a bit of time to settle the fire claim. But the minute if there's a con loss added to it, I can tell you that insurer will usually try to speed up the claim as fast as they can, because everyday delay is everyday payment by the insurer, so we cannot afford to delay too long. So as far as the con loss is concerned, we will make sure that the fire itself, the asset itself or the building itself is quickly reconstructed and so on, to make sure that they are back to business as fast as they can. Okay. Right, fire also we have 3 tiers rating. We have those like tariff. So this is a fire and con loss combined. So anything below the 10 million, we classify as tariff. And then those like 10 to 100 million, we put as cell rating. Above 100 million, then we put it as a special rating. Okay, fire and con loss combined. All right, in your con loss, you notice that sometimes they may have multiple items, or they may have multiple locations with different rating. So let's say the building, the rate could be like 0.5. Then the machinery, it could be 0.556 because of the EICB. And then the stocks, it may be like 0.625 because of the spontaneous combustion. So end of the day, which rate are we taking? Is it the building which is 0.5, or is it the stock which is 0.625? Okay, so we have 3 different ratings for building, machine, and stocks. So what we do here is that normally we will take based on the average. All right. Okay, this one is from Mary Tan. Can buy con loss if I have an all risk? Yes. Like I say, these all risk policies, we also cover the fire element. So take note, it's only when a fire happens that can trigger the con loss. So if you say like all risk today, if there's any theft damage or any accidental damage to the equipment, causes interruption to the business, that one doesn't trigger the con loss. All right. So maybe you can check with your MO and underwriter pertaining to this. Is it okay, Mary? Just give me a heads on. Right. The next one we have standard clauses. Now, example in your fire, we do have those like temporary storage, destination, and so on. Whereas in the con laws, we also have another standalone clauses, which is only applicable to con laws. Now, fire clauses usually are optional because certain clauses apply to certain items. Example, your temporary storage is only applicable to stocks, right? Your outbuilding only applies to building. So we cannot just apply the clauses across the board. All right, we only apply according to the items insured. Now, for the con laws, all these clauses are standard. So usually these are defaulted. So when we issue the con laws, these clauses is usually defaulted. Okay, this is already added to it. And most of these clauses only applicable, especially when it comes to claims. All right. So all these clauses I will go through towards the end when we talk about this. Okay, for the fire, usually when we talk about excess or deductibles, fire damage normally there's no deductible, but there will be minimum deductibles for perils. So let's say, like example, if you have a storm damage, there will be an excess of 200 ringgit. No? Any impact damage, there will be like 50 ringgit excess. But for con loss, okay, next one. Okay, usually con laws, we have what they call this time excess. We go by the time. So example, con laws, we have based on the standard excess, we have like 72 hours, So that means to say any losses following the interruption after the 72 hours, then only they can file a claim. Okay, so if you want to bring down the time access from 72 hours to 48 hours, also it's possible. The one you may need to charge them a 50% loading. And if they want to bring down further to 24 hours, also can. That one will be like 100% loading, charged on the extension rate. Okay, so that's what they call time access. All right, next slide. Okay, next one. All right, so let's have a bit of Q&A here, true or false. Okay, for this session, I hope every one of you today, I hope you can participate in this session. So just tell me the answer right, true or false only. Is it possible? Okay, you can type in Q1, Q1A, so that I know it's referring to question 1. Boleh? Okay, FCO means fire con laws will respond if there's interruption of business following insured damage under the material damage policy. True or false? You put that Q1, type Q1. Okay, good. This one, Levin Wong. All right, Q1A. 1A is what? No. If you see the bracket here, true or false. If you see the box on the other side, that means it's A or B. So I give you an option here. Okay, so number 1 is true. Okay, all right. Ika, you can show the answer.
Okay.
Okay, so remember I told you your fire need to trigger the con loss. So just now you're talking about all risk. If it's due to theft, due to accidental damage, that one will not trigger the con loss. Okay, so that's the first one. Okay, number 2, the con loss must be accompanied by material damage, which can also include this equipment all risk, covering like static and movable machinery. Also true. Okay, number 2, true. Right, loss of gross rental can be insured under the con loss is specifically declared. Betul ke? Con loss, you have three kinds of items you can insure. Usually, we will mention gross profit. All right, we have gross profit. We also have gross rental. We also have the gross revenue. So depending on the nature of business, where a business they have a lot of those standing charges, a lot of expenses. Usually the one we put it under gross profit. But if you're talking about the service industry, example like your agency, so that the revenue that you generated, meaning from the sales that you generated or the commission that you earn, so that one we normally term it as revenue. Okay, so if you are the property owners or investors, so usually when you rent out a building to a tenant, so any rental that you receive from this tenant, that one we'll put it under the gross rental. Okay, right, so it can be insured is specifically declared. Betul? Okay, good. Oh, Ika boleh nampak you punya icon dekat sana. Can see your face there. Okay. All right. Con loss is limited to gross profit, gross revenue, or gross rental for client operating for at least 1 year. Okay, number 4, true. or it can be less than a year. Okay, answer for number 4. All of you mentioned true. Not necessary must be 1 year. Now, if today any new business, let's say, oh, I just started my business, let's say about 6 months ago. So if they ask you, can I take up a con loss for my business that's 6 months ago? Okay, it's possible. So you need to check with them. Number 1, can they tell us maybe their projected gross profit? In any business, I'm sure they do have their business plan. So maybe they tell you, okay, for the first year, maybe they won't be able to break even, right? Maybe the second year they will break even. Then by the third year, they can expect some profit, things like that. So if they can give you the projected gross profit, then you use the projected gross profit. Okay, so like I mentioned, the projected gross profit is only an estimate. So end of that, let's say after the end of the 1 year, if they declare to us the actual gross profit generated, then we will just adjust and we do it accordingly. Okay. Now, if the business, let's say our friends say, oh, the first 2 years is either they are going to lose money or it's not even going to break even, you can also insure their standing charges. So standing charges means those charges which they will need to continue to pay even due to a claim. Faham? Let's say whether with or without the fire, they still need to pay for all those expenses. You can insure that as standing charges. Example, let's say like a salary. Okay, or even the director fees. So whether there's any interruption or not, the director fees is due means must pay means must pay. So one of the insured standing charges you can insure is the director fee. Okay, so these are possible. Don't have to be a year. So when it's a new business, then we will attach what they call the new business clause into the policy. Okay, all right. Number 5. Okay, number 4. Number 4, most of you say true. Okay, not necessary. It can be less than a year. Okay, what about number 5? Gross profit is meant for those. Now this is answer either A or B. You see the box on the right side, so it's either A or B. Okay, what do you think? It can be A or B. Gross profit. Jawapan? Anybody? Number 5. Okay, B, right. So these are those that are involved in retail, wholesale, manufacturing. So I told you this is where they have a lot of these expenses incurred. So you put it under your gross profit. Okay, so very good for every one of you who attempted this. Okay, that's good. All right, let's move on to the next one. Okay, next. So let's look at the business impact between your fire and your fire con loss. Okay. All right. If you see on the left side, this fire, you can see that this is more related to the physical damage. All right. So let's say we insure the building, the machinery, and so on. So because of a fire that causes destruction or damage to the property, then we will, by reinstatement or replacement of the machinery, put the business back to where they are to ensure that the business will continue as usual. All right. Okay. Next one, if you look at the con loss. Okay, semua sekali. Or you can show all at the same time. Okay, if you look at the con loss, which I mentioned just now, it is more to the financial losses. So while the fire will reinstate and replace all the property damage, so once the business or rather the asset is restored back to its original condition, then the business will resume. But as long as the building or the factory is still down, it will have a serious financial impact on the business. So in this case, the con loss will ensure that we will be able to at least ensure that the business will continue after the building has been rehabilitated. Okay. Now, another good thing about this con loss is like that. Usually, a lot of customer may think, they may think, oh, I got fire policy already, so anything happen, I can use that money from the claims to at least to sustain my business, No, it doesn't work that way, For fire, example, when we talk about reinstatement, you have to get it done, then only we will reimburse you, Because reinstatement, we won't know exactly how much is the reinstatement cost until you complete. Okay, so once you completed, how much is that? Then we will reimburse you accordingly. That money from the fire claim is strictly for your reconstruction purpose only. That's it. You're not supposed to use the money to go and roll your business. By right it shouldn't be. Now, on the other hand, if you have this con loss in place, so once the fire admitted liability, then the con loss will follow suit. So once the con loss say, okay, we will also pay for the claims. Usually company will pay upfront. So we have one very important clause, which we call it the payment on account. So we will pay upfront. Company will pay an upfront, let's say like 20%, at least for the insurer to temporarily operate the business elsewhere. No? So either they go and rent a premises, they go and get the machineries, they go work overtime, whatever, to make sure that they can generate some sales to help them to cover some of the expenses. You see that? So that's the good thing about con loss. You have this upfront payment, which can help them to sustain their business while waiting for the factory to be rehabilitated. Okay? All right. So the next thing is that how to encourage your customers to take up this con loss. So before we encourage, I want to talk about the consequence first. So usually we will tell them the negative part of it. Kita macam marah dia dulu baru sayang lah. Okay, so the first thing first is you tell them, okay, the negative or rather the consequence of not buying. So today when you ask them to buy con law, they say no need lah, no need lah. So to them they don't take it seriously. But if you put this to them, the negative, the impact on not taking up the con laws, maybe they will see the picture. Now on the other hand, quite a lot of people when they sell these con laws, they will tend to maybe share on the good side of the con loss, So meaning, they will tell the client, if you take up the con loss, so any interruption, any fire and so on, we will help you to pay for all the standing charges, right? We help you to recover all your net profit. You tell them all the good things about con loss, they don't see the needs. So we give them the negative part of it. What if you don't take up a con loss? Okay, right. The first one you can see, now company, of course, they only surviving on cash flow, right? So imagine the company's cash cow, meaning is their cash flow. If nothing happens, the business runs as usual. But the minute when something happens, definitely without the con loss, it's going to have a big impact on their cash flow. Okay, so let's see the first one, what happened. Okay, that's your cash cow. So next one. All right. Number one, if they don't have a con loss, meaning again, they may have to go back to their shareholders, right? Shareholders, I need you to pump in another 10 million in order for us to sustain our operation. The shareholders may not be too happy. When they pump in the money, they would expect a very good ROI, return on investment, right? So now you're asking me to pump in more money to ensure that you can sustain the business while waiting for the factory to be rehabilitated, correct, no? Shareholders will not be happy, and you know what will happen next? The shareholders may even take a legal action against that team of management who manage the company. Okay, so first thing first, the shareholder may also question the team of this management. Why didn't you take up a con loss? Okay? It can be like a management negligence, So if this team of management, because of their management negligence or error and omission, they can also be sued by the shareholders, So the policy that may relate to this management negligence is what policy you call that? Anyone? No, the con loss, the management team can also be sued now for management negligence, error and omission, wrongful act, and so on, So if they're liable, there's another policy that's suitable for them. What policy is that? Anyone? The team of management, they can be sued. That one's correct, 11 Wong. So that's what they call this director and officer's liability. You see, you cross-sell again. For now you tell them, if you have found negligence and you're supposed to run the company in a manner that makes profit, but failure to do so, so now the shareholders will take action against you. So that will be part of the D&O. All right. So let's say the shareholders are reluctantly pump in the money. Okay. So now with the money, so now the insurer will have to use that funds in order to reinstate the property damage. So I told you earlier, reinstatement value means you need to reinstate first. How much exactly is the cost of reinstatement? Then only we will reimburse you accordingly. Okay, so that's number two, the money that's pumped for the reinstatement. Okay, number three, Okay, number 4 first here. Okay, further costs may also be incurred in order to speed up the recovery. Okay, so you may have to work overtime. You may need to operate the business at more premises than before, and so and so on. Okay, the next one. All right, so they may have to continue to pay for those fixed expenses. So again, when we talk about fixed expenses, means those expenses where they will still need to continue to pay in spite of the interruption. So example, just now I mentioned the director fee. You like it or don't like it, you still need to pay for the director fee. Okay, so maybe other things like even like wages. So some of those skilled workers, you may still want to retain them during the interruption period. Okay, so you still need to pay for the wages. You may also need to pay for those like maintenance. Okay, you may need to pay for traveling. When I say traveling, means working travels. Even though the factory may be down, but the salespeople may still need to go out and do marketing. You see that? So these are all the fixed expenses, which they will still have to continue to pay. Okay, in spite of that fire and so on. Right, next one. Okay, funds, including the net savings. Imagine once the money has been used to pay for any other expenses, comes a time their net savings will become depleted. Okay, so once depleted, then what happens? Cannot sustain anymore. So what will happen to the business? Okay, next one. Once the net saving, everything depleted. Okay, number one, you may find that the business has to be liquidated. Okay, they cannot operate anymore, liquidate, that's it. So liquidation is one thing. You tell them what you have, what the business started many years ago, and because of that failure to have this controls in place, you know what's the impact on you? You tell them, number one, how long have you been in the business? So they tell you, oh, my business are already 3 generations, already 40, 50 years. Imagine 50 years in business because of the failure to effect a proper controls. The whole business just shut down after 40 years of business, And not only in terms of the not in terms of the generation gap, you may also lose all your customers. Your customers may not wait for you. So even if you tell your loyal customers, wait for me until my factory is up and running another 6 months down the line, your suppliers, your customers will not wait for will not wait for your insured to be back in operation. So the most is that they will go to their competitor. They can't wait for you. They will go to the competitor. So your insured will lose all your clients at one go, just like that. Okay, and not only in terms of that, it's also your market share. If the business already like 40, 50 years, I tell you, the let's say like Alfred got a market share of like 20, 30%. So because of the business that suddenly got liquidated and so on, what happened? Your market share of 20, 30%, which they put so much effort in getting all these business, just go down the drain. All right. And don't forget, that is not the end of it. What about the workers? The workers who has been working for you for years and years. So because the whole factory liquidated or shut down, all your workers, everyone got to leave. Okay. Now, even if you manage to come back, your workers may not come back. So you may have everything in place, but if you don't have the manpower to work on this, it's of no use. The company will continue to go downhill. Okay, so that is not only the end. You think okay lah, the business liquidate, that's it? No, whatever is it, let's say all your other creditors, perhaps your creditors, your shareholders, supplier, customers may even now file a legal action against this company. Okay, the example, you owe me money, you still need to pay, right? Then when I order the stocks from you, you don't deliver to me on time, okay? My business are affected, I may even go after you, right? So these are the consequences of not buying. Okay, so without the con loss, like I said, it may have a serious business impact, or rather the financial impact on their business. You got it? So once you share this with them, whether they actually they open up their eyes or not. Okay, so what you can do is that you can use all the real case scenario that's happening today. Use that example. So you can you also read from the newspaper. There's a lot of fire involving a lot of factories, right? So when the minute this factory all burned down, the first question we always ask, do they have a con loss or not? Sometimes the newspaper reported one, oh, fire damage, anggaran kerugian 20 juta. That is the physical part, the fire damage. 20 juta, fire, of course, we can still pay, no problem. But the first question we ask, do they have a con loss or not? Kalau dia tak ada con loss, I tell you that's it. Okay, so that is the consequence of not taking. So once they open up their mind, okay, it's good thing about this con loss. Then after that, you tell them now, if you take up this con loss, so what benefit do you get from here? All right, so this is especially essential for business survival. Con loss is all about survival. All right, next one, the benefit of it. Okay, so the first one, all right. Okay, number one, it protects cash flow. So I told you just now, if you have the con loss, the company will pay an upfront to ensure that you have the funds to at least to operate your business temporarily. Elsewhere, generate some sales. They can also help you to pay for some of your fixed expenses. Okay, you don't have to get your shareholders to pump in all the unnecessary funds. Okay, right. Number two, reputation and also your market position. So I mentioned just now, if you have a con loss, at least you can get your business, you can ensure the continuity of your business. But if the whole business goes down or rather liquidated, definitely I told you, it's all about your reputation and even your market position is also affected. Okay, right. The third one. Okay, so to prevent any insolvency risk, that means to prevent the company from being liquidated. Okay, right. Number four. Okay, number four, you see, as far as the bank is concerned, the bank usually, if any amount owing to the bank, let's say if you got an OD or any loans taken from the banks, the bank will not be sympathetic. So whether your factory is operational or not, the time due for you to pay interest, you pay. Okay, so at least with the con loss, you manage to get the business, at least to sustain your business. You can still generate some sales. At least with all the sales, you can help to at least cover some of your payments. I mean to the bank. Okay, right. Number five. Okay, so number five, strategic risk management tool, transform fire from asset into a business continuity. So you see, it's not only a fire policy. We will reinstate, we will replace the property damage to ensure that at the end of the day, your business still can continue like just before when something happened. Okay, right. So this is basically the good thing about this con loss. Right. So if you are going to promote these con loss, so perhaps what you can do is if you ask them, do you want a fire con loss insurance? They will tell you no need. They don't see the need, right? So you use the what if method. Okay, what if the business is down for 12 months, for 18 months? So what will be the financial impact on your business? Without the cash flow, let's say, how is it going to impact your business? Who are you going to pay? All these things. So this perhaps may even open up their mind better. Okay, right. So so that's talking about this control. All right, next one. Okay, so up to now, all good. Can I get a heads up? All up to now, all good. Laka, all okay, yeah? Good. All right. Next one. What can be insured? All right. Next. Okay, tunjuk saja, tunjuk semua saja. Okay. Right, we have these gross profit, different basis. We have gross profit addition basis. We have the gross revenue. Okay. Belum this one. Gross revenue. We have the gross rental. We have all the wages. Okay, the one in dark green. These are the very common one that usually that we market. Okay, so I mentioned earlier, we have this gross profit, gross revenue, as well as gross rental. Now, earlier I also mentioned, if this is a new business and they don't have any projected gross profit and so on, then you can insure just only based on the standing charges, also can. All right, but if they can tell you the projected gross profit, also is possible. Okay, so let's look at the gross profit, the gross revenue, and the gross rental, and let's try to see exactly what these three are related to. Okay, next. Okay, gross profit, gross revenue, and gross rental. Okay, next one. Good. All right, gross profit basis. All right, show me the answer. Why? Anybody? Why? Okay, so this gross profit, earlier I mentioned, these are good for those, like example, manufacturers, wholesalers, or any businesses where they have a very significant expenses, right? Okay, example, we have two type of what they call these costs incurred. One is what we call variable cost, another one we call is a fixed cost. Make things easier, just call it variable cost and fixed cost. Sometimes there are many terms used. Sometimes we call it specified working expenses, right? Sometimes we call it other names. But for this session, we put it very easy. Either you call it variable cost or you call it a fixed cost. So variable here means we follow the trend. So if the business is normal, example, the expenses is normal, but the minute when something happens, the insured may not need to pay for the expenses anymore. Okay, so variable will follow the cost itself. So example like raw materials. If a fire happens today, you think the customer will still need to purchase raw materials? If the whole production line already destroyed, so raw materials they don't have to buy anymore, correct? So that one we call it variable. Okay. Now, when you talk about fixed means these expenses will still need to be paid regardless whether there's any interruption or not. So just now I mentioned example like director fees. So whether there's any interruption or not, when the director fees is due means means must pay. So the one we call it fixed. Okay, paham? Variable and fixed. Usually, if it's fixed, before that, Eka, belum lagi. When you talk about those fixed expenses, usually we call it, like example, this one, interest standing charges. So interest standing charges means these are the one that we will still continue to insure, regardless whether there's any interruption to the business or not. Okay, so that's gross profit. Okay, next one. Okay, revenue. Why? These are for those service industry and so on. Okay, answer. Why? Okay, example for your agency business, if you compare to the manufacturing, I don't think you have much variable expenses compared to those that in the manufacturing, right? So the premium that you generated or the commission that you earn, so normally we put that as part of this gross revenue. Okay, all right, next one. All right, so this gross rental, this is especially for those like property owners, investors. So if you're talking about the premises or the building which they rent out to the tenants, so all the rental that they receive from these tenants, usually we'll put as gross rental. Okay, so these are the three bases, gross profit, gross revenue, and also gross rental. For the rest of the session, I will be using the gross profit because gross profit, there are more things for you to actually to analyze. Okay. Okay, so next one, answer. Your selling tip, do you want to cover gross profit, gross revenue? So usually, before you talk about profit, you talk about revenue, or you talk about rental. So you need to just look at the business itself, whether they are driven by sales of goods, services, or even rental income. So example, for you as an agent or any of the service industry, it's more to services. Those are professional people, like even like lawyers, architects, and so on. So these are all part of services. So we call it gross revenue. Okay. Right, so let's look at the coverage and exclusion. So this is your multiple choice question. So we may have this A, B, C, D, and so on. So I hope that every one of you can try your luck, okay, in terms of the question here. Boleh, So instead of me going through that usual coverage, con loss policy covers the business interruption arising from the fire at the, no, the one, not necessarily. These are all in the specification. So what I want to do is just to challenge your mind, whether this is covered or whether this is exclusion or whatever is it. Okay. All right. So the first one, which of the following must occur before the condos becomes operative? Okay, one A, one A pun ada, one B also. Okay, so your answer is one B, okay, B. Alright, Ika, jawapan. Okay, you got it right, or BBB, yeah. All right, physical damage to the insured property. Remember the word material damage. So there must be a physical damage to that property insured in order to trigger the con loss. So whatever the fire operates, follow the perils. So if today you got fire plus all the perils. So if let's say flood is one of the perils. So if the flood that causes interruption, then it will trigger the con loss. Okay, number two, if the material damage covers fire, lightning, okay lah, this answer very straightforward right? So we'll cover both fire and lightning Okay, so that's only basic cover Any other perils, depend whether they have actually added on or not. Okay, which of the following is typically covered under your con loss? Okay, question 3. Okay, loss of gross profit during the indemnity period. Okay, that's good. Okay, number 4, under the con loss, the indemnity period begins with, okay, number 4A, from the date of the claim is submitted. Okay, A, semua A betul ke? Semua A betul. Okay, B, okay, Crystal O, yeah, is actually B, Okay. All right. This indemnity period, I will go through with you when we come to the topic. But since we are on this question, so just a quick one. This period indemnity is different from your period of insurance. Your period insurance is usually 1 year, 12 months. Now, this IP, in short, we call it IP. IP can be like minimum of 6 months. It can be like 12 months, 18 months, 24 months, even up to 72 months. Okay, so the IP here means usually we will ask them, how soon can they put their business back to normal? You don't ask them how long will it take for you to come back? In con laws, we want them to be back as soon as they can. So usually we ask them, how soon can you put your business back to order? How soon, rather than how long it takes. Okay, so again, it depends on the type of business. So some business, let's say like even like a factory example, it may take them a while before they can actually reconstruct, before they can actually come back to normal, So it can be something like 12 months, 24 months, and so and so. Later, I will share with you how do we actually discuss with them pertaining to the IP. Okay, a lot of factors that we need to consider. That one I will zoom in later on when we come to this topic. Okay, so that means it will start from the date of the damage until when it's fully recovered. Okay, or up to the maximum indemnity period, whichever comes first. So let's say if they choose 12 months IP, and if they manage to get the business back to order by 9 months, then losses up to 9 months we will pay. So if they choose 12 months and if they take about 18 months to be able to back to normal, then we pay up to 12 months. Okay, whichever comes first. All right, next one is number 4. Number 5 really. Okay, which of it is not covered under your standard con loss? Not covered. So this one also very clear cut. Okay, 5C. Okay, you are right. Okay, loss due to uninsured peril. So as I said, we only follow your fire and those selected perils only. So it's uninsured, then too bad. So let's say today our friend did not take up any impact damage. So one day if the car from the main road crashes into the building and bring down the whole building, so that one, if they don't cover the impact, then too bad. The con loss will not trigger. Only if they don't buy, that means even the fire will not be payable at all. Okay. Right. Number 6. Okay, good. 6A. All right. Which of the following would normally be excluded unless specifically extended? Okay, which one? A. All right. Loss arising from fire at specified supplier premises. Okay, this specified supplier is an extension under your con loss. This one nothing got to do with your fire. So if any fire happen at the specified premises, it will trigger the con loss. Earlier, we mentioned you must have that material damage, but like this scenario, the insured location may not necessarily have the material damage. As long as they have this extension, a fire, which is an insured peril, happen at a specified supplier premises elsewhere, causes the con loss to trigger. So that one, we have what we call the waiver of material damage. Okay. Cepatnya, I'm still reading the question. You cepat atau siapa cepat? Okay. Right. So we have this waiver of material damage. That means it says that we will waive the requirement where the insured property must suffer physical damage. The one, yeah, if we are talking about those other extension, okay. All right. Number tujuh. Okay, tujuh. Which of the laws of tujuh? Okay, number 7A. Loss caused by reinstatement due to insufficient capital. Correct. So your con loss will exclude any loss caused by delay in reinstatement due to insufficient capital of the insured. So you see, even when we talk about 5-year reinstatement value, now this reinstatement, the insured must get the property reinstated within 12 months period, So to do that, I told you earlier, they need to pay first, pay for the reinstatement first. How much is the actual cost of reinstatement? Then we will reimburse accordingly. Okay, so without that capital, the insured may not be able to get the factory, reconstructed. I mean, within the time frame. So this itself may cause a further delay in terms of the interruption. Okay, nombor 8C. Oh, ini jawapan betul. Cepat ya. Okay, 8C. Alright, which statement best describe the relationship between fire and con loss? Okay, con loss depend on the insured damage under your fire. So the fire must trigger the con loss. Okay, so again, when we talk about fire, it must be due to an insured peril that trigger the con loss. Okay, so when fire emit liability, the con loss follows suit. If fire say no pay, that means the con loss also say no pay. All right, so now we are into this. Okay, how to determine the con loss gross profit? Okay, many times the challenge usually when the agent asks this question, how to insure, how much to insure? So most of the time also not very sure, right? How much to insure the con loss? Okay, no worries. The first thing first, if you're going to talk about con loss, you must get the right person to talk to. So talk to the person who is in charge of all these financial things. You can talk to those like accountant, accounts manager, anyone involving in accounting, that will be the best person to talk to. Okay. Don't go and talk to the mechanic or salesman. The one they won't tell you. Now, personally for you, you ask yourself, do I have to be an accountant? Belum lagi Ika. Let me just emphasize a few more points here. Okay. So first thing first is that get the right person to talk to. Okay. Now, do we have to be an accountant to really understand all these things? You don't have to. To us, our gross profit from the insurance point of view and from the accounting point of view is different one. Their accounting is very straightforward. They take whatever sale, less out everything, then they get the gross profit, which I will show you later. That is not the one that we pay. For our insurance, we take the net profit, and then all those expenses that they have, we need to filter out one by one, So you sit down with the accountant or the accounts personnel, one by one, you need to go through with them, and then you need to filter out. Okay, so example, I will show you afterwards. Let's say like just now example like director fees. So you ask them if any interruption to the business, do you still need to pay the director fees? Of course, they say directors still have to pay. Okay, so that one you put as fixed. Fixed means these are the expenses that they still need to pay in spite of the losses. All right. Then the next question you ask them, what about purchase of raw materials? So the client will tell you, oh, raw materials, if the factory burn down, I don't need to process anymore. So I can stop all the purchases. Okay, then the purchases you put as variable. Variable means these are the expenses that you don't have to continue to pay. Okay, so that's it. You need to fill out one by one what is considered as fixed. Another one is what is considered as variable. Okay, right, let's go to the next one. Okay, dua sekali. Okay, the first one is your different basis. Right, the different basis, you can see this is the formula, turnover plus your closing stock, okay, plus all the opening stock. All right, we have this uninsured working expenses. So like I say, just make it simple, just use the word variable. Don't get too confused. Sometimes we have specified uninsured working expenses. Forget about that. Just use the word variable. So are you clear with the word variable? Variable means these are the expenses which they no longer need to pay due to the interruption. Okay. When you talk about the fixed, fixed means these are the expenses. They will still need to continue to pay in spite of the interruption. Okay, so in the market, usually most will use the different basis compared to the addition basis. All right. Now, the different basis, good in a sense that you just tell us what you don't need to insure. So maybe out of 10 items, you just tell us about 3 I don't need to insure. That means the balance is considered as insured. All right. If you go for addition basis, you need to tell us what you want to insure. So let's say you're supposed to insure about 10 items, but you only you only name 7 items. So when it comes to claim, we compare, okay, you insure only about 7 fixed expenses when there are 10 expenses you're supposed to insure, So because of that, we may also apply average, uninsured. Okay, so addition also, we do use that in the market. That's provided they don't have much of these variable expenses, then you use addition basis. Okay, so let's look at the different basis rather than the addition. Okay, next one. Okay, number one, first thing first, during your discussion with these accounts, personnel, and so on, so the first question you ask them, which cost will stop if a sale stops? So that is like variable. So just an example, all those purchases, freight, and so on. So the minute if something happen, I don't need to purchase any more of the raw materials. So that is considered as variable. So the next question you ask is which expense will continue even after a fire? So just like I mentioned, like your director fees, your maintenance, traveling, and so on. So these are called the fixed costs, which they will still need to pay even during the interruption period. Okay, so next one, we do have this one they call wages. Now, these wages, you can either add in as part of the gross profit, or you can also insure them separately. So these wages is example, if a factory, they engage a lot of these what call this contract workers, especially those like skilled, semi-skilled, and also unskilled workers. Okay, so some factories, it depends. They may want to retain 100% of all the workers, maybe during the first 3 months. They want to retain all, regardless whether they are skilled or unskilled. So maybe after 3 months, then slowly they will filter off. Maybe unskilled, they may want to terminate them later, but they still continue to maintain the skilled workers until when the factory is up and running. Because all these skilled workers, factory workers, is not easy to get if you let them go. There was one case in Penang. That one is, I think, is what factory, a government factory in Penang. When the whole factory burns down, they still retain all their workers, especially the factory workers, because they know that if they let go all these workers, especially the skilled one, they may even join their competitors elsewhere. So imagine if once the factory is back to order, they want to engage all these new workers. It's not easy. For them to recruit is not easy. Even when they recruit all these new workers, they need to go for all the retraining and that kind of things. So it will take a lot of time. So it's worth for this company to retain all their workers, okay, maybe for 3 months, 6 months. Then after that, slowly only they will let go some of those. Okay, so these are all part of your wages. Right, next one. Okay, this is just an example of the trading account, that trading and the P&L account, that you may get it from that financial report. Okay, so example like this, when you sit down with your client, you go through one by one with them. Okay, now the one at the top here, this one, let's say during the discussion with them, you ask them, okay, you go through one by one. So first one, you ask them, example like purchase. So you ask them, if at all something happens, a fire happens, would you still need to make purchases or not? Okay, so if you look at it now, the purchases is like 1.384 million, right? So if they tell you, if I got one production line and the whole production line, everything destroyed in the fire, I have no machinery to process it all together, then the one you consider as variable. We put as 100%. Example, the customer say, anything happen, one production line, everything goes down. I don't have to purchase any more these raw materials, so that will be 100%. Okay, if if, let's say example, they got 2 production line or maybe 2, 3 production line in 2 different building. So maybe one building is for the primary, the second building is for maybe the secondary process. So if they tell you, if one of the production line goes down, I still have another production line which I can still run, right? So maybe they tell you our purchases are like 50-50. I can also split. There is no right or wrong answer. Okay, so it's how you interview them and what kind of response that you get. Okay, so if they tell you I got 2 production line, if at all one line is down, I still got one more production line. So in terms of my purchases of raw materials, it may not be 100%. You see, so maybe they tell you, okay, my second production line, the capacity is like 60%. Okay, the other production line maybe a smaller capacity is 40%. So I may take about 60%. Okay, so meaning to say is 60% of that raw material, I may still need to pay. So that one you put as fixed lah. The 40%, which because of the damage to the machinery one, so the 40% you put under variable. Okay, so are you clear? Are you clear with the fixed and variable first before I move on? Are you clear with that? Fixed and variable. Quick one. Fixed means these are the expenses which they will still need to pay in spite of the interruption. Okay. The variable means they no longer need to pay. Okay. So example like purchases, I don't need to pay that. I put as variable. Okay. Right. Any criteria when it comes to how long the business decide to retain their workers? That one, we do have a formula for them. So whether they want to retain all for the first month, second month or third month, there is a formula for them. Okay, initial Lee, Lee is it? So there is a formula you can pick according to that the formula there. Okay, so you have like the first maybe they have like first 1 month, 2 month also can, and then after that for the remainder period also can. Yeah, you look into that wages the scale. Okay, Lee, you look into the wages the scale. Okay, so example, purchases, which I mentioned to you just now. Right, next one, like example number 2, wages. So the wages here, they spend about 80,000. So then again, you ask them, these wages, especially the factory workers, when you talk about wages means these people are more like contract workers. Either they are paid like daily or they are paid like hourly, and that kind of things. That's why they are termed as wages. Salary is different. Salary means these are the permanent employees. So people like their staff, their admin staff, these are all salaried staff. So example like these wages, you ask them again, right? Out of this 80,000, if a fire happens, okay, are you going to retain all of them, or are you going to terminate all of them? It's their choice. Okay, so if they say that, okay, out of 80,000, maybe I will still retain my skilled workers. The unskilled and the semi-skilled, I may let them go. No? So if they say that, okay, out 80,000, maybe 50,000 is to retain my skilled worker, then you split 50 and 30. Okay, so like this case, number 2 here, wages, they say, okay, if anything happens, I will just terminate them. So if they're going to terminate them totally means they don't have to pay for the cost anymore. So that one will be under your variable. Okay, so the next one you go through again. Okay, factory power, the current and so on, right? So the power is 1 to 8,000. So here you ask them again, factory power. Now they say, if anything happens to their factory, everything down, I don't need the power for the process anymore, right? So the power that constitute about 80%. So they say 80%, I don't have to insure anymore. Now the 20% could be for the office. Maybe office and other building within the site, which may still require electricity for them to work on. Okay, so now they split 80-20. Faham? 80 as variable means they don't have to spend anymore. 20 which they will still need to continue to pay. Okay, so you put 80-20. So the 20 will go into the fixed expenses. All right, so you see one by one you go through. All right, so then after that example here, sorry. You see, I told you, you don't have to be an accountant, all right, to go through this with them. You see, their gross profit is like that one, sorry. Belum lagi. Okay, you see where's the gross profit? Net profit. Dia punya gross profit is somewhere here. You see the gross profit, they take this and this minus this, the gross profit is 1280, right? So I told you already, their accounting is 1288, but to us, our insurance is not this figure. Our insurance that we take out all the other variable expenses. Okay. Okay, this one, hi-fi advisory. Okay, I tell you what. Okay, can a Connos covers the wages and compensation to lay off workers in the event of a fire? Sorry. Okay, these wages like that. If you're talking about layoff, right? So if you're talking about layoff, that means you don't have to pay anymore. No? So that one, you just dump it as part of the variable expenses. But if you want to put it as a separate items, we have these dual wages where you can also select either as partially or you can select it usually you can select partially maybe 100% for the first 4 weeks or 8 weeks. Then the balance of which you may scale down the percentage to a lower percentage, maybe like 25%. These are all in the scale. Okay, so this laying off is one of the variable expenses. Okay, any high five, yeah. All right, so coming back to this, so again, you go through with them, example like salary, no? So you ask them, what about salary? So if they tell you, oh, salary, regardless whether got interruption or not, every month when the salary is due, I have to pay, means I have to pay. So salary, now you take up, you put as fixed. Okay, so next one you ask them, what about auditor fee? Wait, auditor fee must pay, okay, pay. Then rental rates must pay, advertising. Then you ask them, what about advertising? So advertising, they spend about something like 24,000. Advertising about 40,000, right? So again, you discuss with them. What about advertising? So if the client tells you, okay, right now I spend about 40,000 on advertising. So if at all, if a fire happens, the client will tell you, well, I may still need to advertise more. I may need to incur more. Why you need to incur more? Of course, I got to assure my customers that we are still in business, you see. I got to continue to advertise to assure my customers that we are still in business. So if advertising, this one, they still need to incur these expenses, then you put as fixed. Okay. Then next one, like insurance. You ask them, what about insurance? So insurance depend. If it's only one building, everything burned down, of course, renewal, you don't have to pay anymore, correct? As long as the fire happened during the period of cover, we will cover you. So when the policy expires and the building already all destroyed, there is no renewal. We are not going to renew the policy to cover all the damaged building, right? So now they tell you insurance, upon renewal, we will lapse the policy because the building already destroyed. Okay, so insurance don't have to pay. Then insurance you take out and put as variable. Right? But if the client again tells you, oh, I got 3, 4 buildings, so if one of the building burned down, right? Other buildings still operational, right? So other building, I may still need to pay for insurance. So my factory may be down, I may still have my warehouse, I may still have my office, okay, and other blocks are within my own compound. I may still need to pay insurance for those unaffected building, okay? So now in terms of the insurance, I can also tell you, okay, out of the insurance, which is about 24,000. So I can tell you like 24,000, maybe 4,000 is for the building where it was damaged in the fire. The rest of the other buildings, those like warehouse, office, I may still need to insure them. So you take out 4,000 as variable, then the 20,000 as fixed. You see that? So you split again. So you just go through one by one, right? Okay, what about lighting? Lighting also the same thing, no? Lighting, they say, okay, if the factory burn down, the factory which consume, let's say like maybe like 60% of the lightings, right? Then 60% you put as variable. So if your office and other blocks of buildings still require lighting, so maybe the 140, then you split again. Okay. All right. So one by one, you just go through with that. All right. So if you look at it, don't you think it's something like very interesting? Compared to a fire policy, when you want to talk to them about the building, the sum insured for the building, the reinstatement, the market value, and so on, fire, I always think that is a little bit more technically difficult to explain, am I right? But when you look at this connos, it's so much easier. Just one by one, yes or no. Which one is V, which one is F, which one V, which one F, you just split it up. Okay, so all those that come under variable, we put into your different basis, whereas those as fixed expenses, we put under your addition basis. It's as simple as that. Okay. Right, let's look at the next one. First thing, are you okay with this one, which I go through with you just now? Okay, now let's look at the different basis based on the P&L, the trading account just now. All right, so you can see just now the sales is like 3.2 million, all right? So your formula, sales plus your closing stock, so that is your total. And then you less out all the opening stock, work in progress. These are all the variable charges. Okay, variable means these are the expenses when they no longer need to pay anymore during the interruption. So just now I mentioned purchases 100%, wages 100%. So remember the power, this is 80%. 80% comes from the factory. So if the factory burned down, I don't need to pay for the electricity anymore. So 80% I don't have to pay. Whereas the other 20%, I may still need to continue to pay for my office or my lightings. I mean, those power for your office, for your warehouse and other things. So 80 as the variable. The 20% you put into the fixed. So later when we talk about the addition basis, the 20% will go to the addition there. Okay. So just now, the fuel, the bad debt, depreciation, all these things. All right. So you look at the submission now is actually 1090. Just now, if you look at their trading account, their gross profit is 1288, right? So you see, our accounts, their accounting gross profit now is different from our insurance gross profit. Are you clear with that? So it's like 1090. Compared just now to their one, it's like 1288. Okay, so are you clear with this? Okay, first 2 months, we just insured dwell with, okay, first 2 months, 100% remaining 80. When will this 20% be paid? Paid upfront immediately after the fire loss. This one, usually they will follow that indemnity period. Okay, they'll follow the indemnity period. If you choose like a 12 months, then they will split over the 12 months. So that means for the first 2 months, they'll pay on 100%. So the remaining, they will follow the remainder period until that the period lapse. Okay. This one is 100% for the first 2 months, and then you can choose like 20% or 33% or 45% for the remainder period. Okay, so if your IP is 12 months, your first 2 months is 100%. So the next 10 months, then they will apportion it according to the percentage. So if you choose like 20%, then they'll pay 20%. Okay, until they are back to normal. All right. Usually this upfront is like that. For con loss, I mentioned, if you're talking about this upfront, is it the wages or is it the con loss? PT, you're referring to the con loss or you're talking about the wages? I believe it's con loss, yeah. So earlier I mentioned, you mean pay every month? Yeah, they will pay accordingly like every month for the remainder period. Okay, that 20%, which I mentioned earlier, this 20%, if the con loss, let's say, already admitted liability, all right, I mean, in line with the fire. So for insurer, they want the insurer to at least help them to sustain the business while waiting for the building to be rehabilitated, all right? So this 20% upfront is just only a rough figure. It can be 10, it can be 20%. So let's say your con loss to insure for 10 million. So usually they will pay you upfront like 2 million for you to at least get your business moving. So after that, until the end of that, let's say after all the investigation, if the adjuster comes to the final figure, let's say like a 6 million loss. So we take the 6 million, we less out the 2 million upfront, then we pay you the difference. Okay. Okay, this 20, or you're talking about the wages. Okay, 100% for the first 2 months, then 20% for the remainder. Okay, they pay monthly until the balance of the what I call the IP lah. All right, so that is your gross. Okay, tadi just count the one again. Back again. Ika, back. Okay, you see this one. Earlier was the different basis. Now you look at this addition basis. So the formula for addition basis is your net profit. Now all these standing charges here. So these are the one which they will need to continue to pay, right, regardless of that interruption. Now, you remember the factory power here just now? So factory power, they say 80%, which they don't have to pay. Another 20% they will still need to pay for their office, that kind of things, right? So I told you just now, 80% you split, put under variable. The 20% which they continue to pay, then you put under this fixed. So these are all the fixed expenses. You got it? So either way, when you work out, the sum insured will still come to the same one. Okay, so what we do is that your specification schedule that we use is either on a gross profit basis or is an addition basis. So the sum insured will still be the same. The only difference is that we will only specify under your different basis, we will specify all those variable expenses, whereas when you use the addition basis, we will specify all those the insured standing charges. Okay, so that's the two specification that we use. Okay, next one. Sekarang pukul berapa? Okay, one more Okay, just now 9. Okay, one more before we take a short break All right, gross profit sum insured in relation to the indemnity period Okay, next one. All right. Usually when you work out the gross profit, so just now the figure 1060, that one is your annual gross profit. That one represent 1 year, 12 months gross profit. So if they decided to insure the gross profit more than 12 months, then your sum insured, you got to increase proportionally. Anything below 12 months, you still use the 12 months gross profit. Anything more than the 12 months, you need to apportion it accordingly. That means you need to increase the sum insured according to the IP. Okay, so let's look at this example. Now, I take example of 2.8 million. Okay, next. Okay, let's look at the answer. Okay, anything between 6 months to 12 months, we still use the minimum 12 months, right? So if it's like 18 months, you need to increase by 18 times 18 over 12. So you need to increase the sum insured to 4.2. Okay, so if it goes to 24 months, you need to increase double. If you go for 48 months, then you need to increase to 11.2 million. All right, so this IP I mentioned earlier, whether they go for 6 months or 9 months or 12 months, we need to go through maybe a little bit of details with them first in order for them to be able to determine. So the first question, of course, like I said, how soon can you get your business back to normal? It all depends, number one, also on the building itself. Let's talk about these three, building, your machinery, stock, and the manpower. Let's say example like building. If this is a class 1A building, all fully concrete, that kind of things. Now, if it's a class 1A building, everything burned down, you know, how long will it take for them, number one, to clear the debris? Correct? So let's say the minute the fire happens, the whole building burns down, they cannot clear the debris yet. Not today, burn tomorrow, clear, they can't. So first thing first, they need to wait for the they need to wait for the bomba to come first, right? Number two, they may need to wait for the insurance loss adjuster to be on site to assess the damage first, right? So how long it would take for the loss adjusters to come in to investigate the loss? Let's say maybe you put that, okay, maybe like 2 weeks. Example only. Now, after 2 weeks later, then the adjuster say, okay, this claim is admissible, example. Then the next thing is how long will it take for all those to clear the debris? How long will it take to clear the debris? So imagine a class 1A building, you got all the concrete, all the metal structure that is already distorted. So for them to cut and remove all these structures, it will take a bit of time, So maybe in terms of the removal debris, will take you like 3 months. Okay, so just now was like 2 weeks, now plus 3 months again. So after when you, let's say when you clear the debris, at the same time, the insured may also need to submit the plan to the authority for the rebuilding, correct? So when you're talking about resubmission of the plan, if the building is already outdated, for example, right? So the architect may also need to redraw the plan, How long they need to redraw the plan again? So if let's say the insured previously they got a plan, then it's easy for the architect, But if totally they don't even have any plan, the architect may need to visualize now what was the building like before the fire happens, So just to redraw the plan itself, maybe will take you like a month. Another example. Okay, so after the plan already drawn, they may need to submit this to the authority for approval, correct? So if the authority take you 3 months or even 6 months to approve the plan, another 3 or 4 months taken up. Okay, that's only for approval from the authority, Now, after the plan approved already, then the insurer may need to source for contractor for the construction work. Okay, so during this construction work, of course, you may also cross-sell the contractor or risk policy, Okay, so imagine when when they source for contractor, they may open up tender for 1 month, So that 1 month is doing nothing but waiting for the contractor to submit their code. So once the contractor already has been selected, can you imagine again, if the contractor for any reason, all right, decided to back out or withdraw from the tender, the insured may need to wait another month or so to get a new contractor. Okay, then let's say the contractor who already agreed with the job, so during the construction, if any delay because of the weather, because of the raw material and so on, so any delay in the construction will take a bit of time. So let's say the contract period is supposed to be, let's say about 9 months, but because of the delay, take you 12 months. You see that? So after the building already completed, then the next thing is that you still need to get all the CF and so on before they can actually put the business back to normal. Okay, so imagine from the day one when the fire happens until when the building is fully reconstructed, how long will it take? You see that? So just now you see all the IP you add up, roughly about maybe about 12 months or even like maybe like 18 months. Okay, so that is just the building. Next one, you need to consider the machinery. Now building is already there, but got no machinery. Correct? So now the machinery, when did they order the machinery? While the building is under construction, they order the machinery, or they wait until finished, then they order the machinery. Normally, they don't wait until the building completed. So maybe during the midterm, during the construction, they may need to install the machinery first. Some you need to install machinery. You cannot wait until the building completed, then only you install the machine. Tak boleh. Example, those are your generator room, your transformer room, and all this switch room. You need to install everything before the building completed, So during that stage, they may also order all this machinery, either locally or from overseas. If locally, not too bad. What if they order this machinery from overseas? And then, as you know, the Middle East war and so on, and they're not able to supply this machinery on time, again, there will be delay. So by the time the machinery arrive on site, they need to install, they need to commission, right? So how long will it take? So that's machinery, Now, you got building there, you got machinery there, but you got no stock. So now you need to order stocks. If you got the ready stock, it's fine. But what about if there's there's short of supply of this raw material? At one time in the construction, right? They short of what? Short of what? Cement. Short of what metal? Short of what? Cement, something like that, right? So the shortage of all these raw materials, then may even cause their production to be delayed further. Okay. Now the next one, they got building, they got machine, they got stocks, but what about manpower? You see that? So now when they want to get all this manpower, they need to recruit again, So earlier I mentioned some company, they will retain all their skilled workers so that once the factory is back to normal, at least all the skilled workers can get back to their operation immediately. But if they terminate everyone, now to recruit these new members are not easy. So recruitment will take you like what, 1 month or so. Then after the recruitment, the next thing is that all the workers are new, inexperienced. You need to retrain again, So the retraining again will take you another 1 or 2 months. Okay. So you see, just for a manufacturing facility itself, I tell you, the IP can be easily like 18 months. Okay, so that's how we determine the indemnity period. So you just go through, just a simple questionnaire with your client. So just gather some information there. Then that's where you can recommend to them the indemnity period. Okay, so if the client tell you something like 13 months, you make sure that you put it higher. 13 months, maybe you put it like 18 months. So our IP normally is 6 months, 12 months, 18 months, 24 months. So anything between 12 to 18, you put 18 months. Allow for some delay. Okay. Right, so there's some of the questions that you may need to discuss with the client in order to determine the indemnity period. Okay, if fire by 12 months, then the column automatic also 12 months IP. No, not necessary. GH management. Now, your period of cover is 12 months, but your IP can be 24 months, can be 18 months, all right? So earlier we mentioned your IP will start from the date of the damage. So if your policy expire, let's say 31st, let's say expire on the 30th June, example, right? If the fire happens on the 29th June, you are covered. Okay, the period of cover you are covered. Important is that the fire must happen during the period of cover, which is 12 months. So now the IP can be like 24 months. So the 24 months will start from the date of the fire, which is on the 29th June until 24 months later. Okay, so earlier I already explained to you how to arrive at the IP mass, right? So the IP not necessarily 12 months. It can be 24, can be 48 months. It can be even 72 months. It all depends. Okay, ini GH management. You got what I mentioned earlier, how to arrive at the IP. Okay, GH, are you with me? Okay, if you're referring to another question, if my fire is 12 months, my con loss must also be 12 months, correct? Important between your fire and con loss. Make sure that your con loss, the period of cover, if possible, follow your fire accordingly. Do not have an overlap. So let's say now, if you already have a fire policy that runs between, let's say, like 1st January to 31st December 26 month, right? So that's your 1 year fire policy. Today, if you're going to take up a con loss policy effective, let's say from 24th June, right? So you take 24th June until next year 24th June, right? So by the time your fire policy expire in December, your con loss will still run until June, So unless you remember to renew your fire, because if you don't renew your fire, if the fire happen next year in February and your con loss, which is run until June, right? So you may not have a fire policy to trigger your con loss. You got it? So make sure that your fire and con loss, the expiry date coincide with each other. All right. So let's say today, if you're taking up a con loss, so maybe you can just take up a con loss on a short term first, on a short period basis, maybe to coincide with the fire expiring on the 31st December. Okay. Con loss means you take out about 6 months first. All right. Then next renewal come, your fire and con loss together for 12 months. Okay, so let's say if your fire expire in December, then in November, you decided, the client decided to take up the con loss, right? So if you're going to take up the con loss in November, then you better renew for more than a year. So that means your con loss, you take up for something like 14, 15 months. Okay, third quarter, insure the next 1 year, continue to the next 1 year. You got it? Because if you're talking about con loss for 3 months, I don't think underwriter will give you 3 months. Okay, so if from November onwards, just insure 2 months plus another 12 months renewal until the next year. Okay. All right. Next one. Okay, can renew fire cover before building or machinery fix. This one you are referring to what, CAR or what? Can renew fire cover before building or machinery is fixed. Lee, what exactly you mean? Is it a vacant building? Is it a vacant building? Then what? You fix the machinery or what? I don't get your question. Can renew fire cover before building machinery fix? Lee Kasim. What's your okay? Fire cover expire by IP more than the period. Fire cover expire by IP. No, usually I mentioned just now, your fire and con loss, if possible, the expiry date coincide with each other. Okay, so let's say if your fire already expired and your con loss extended beyond the expiry date, right? So you need to ensure that your fire policy, make sure you renew and then you coincide with your con loss. Okay, either one. If your con loss goes beyond your fire, you extend your fire to coincide with the con loss. If your fire, let's say, is a longer period and your con loss happens to expire, then you extend to coincide with the fire. Okay, so whatever is it, make sure your fire and con loss are, if possible, try to coincide with each other. Because if you allow them to overlap, in case if you forget to renew the fire, then your con loss is there, but your fire already expired. You see that? If your fire is still on, your con loss expire, at least not too bad. At least your fire is still payable, Clear? But it's like that. Once the con loss is there, make sure they coincide with each other. All right. What if the loss due to flood? Okay, if your fire policy, you extend to include the flood perils, so yes, we will follow your fire, because your con loss, we also charge you the rates, for the fire plus whatever perils that you add on. So let's say today your fire is 0.3, you add in your perils 0.15, 0.45. So we will charge your con loss at 0.45. Okay, so any flood that causes interruption at the insured premises, then this one we will also trigger the con loss. Okay, now you must add in the perils. So without the perils, we won't pay. Okay. Right, next one. Alright, sekarang pukul berapa? 11. So you want a 5 minutes break or 10 minutes break? Okay, one more before. Okay, let's see the answer. Right, just now it was 2.8 million, right? So that one is based on the annual gross profit, which we extracted from the P&L account. But also do remember to apply for all this growth adjustment. So remember earlier I told you, if you get the last 3 years financial report, right, you more or less be able to gauge what was their trend. So whether the last 2 years, whether the business going upwards or whether it was stagnant or whether it was going downwards. If you look at the con loss where it's going downwards, just be more careful, because any business where it's going downwards, of course, that one will be more to that moral hazard. Okay, when the business are not doing well, of course, company may always look at other ways to file a claim. So as long as the business is gradually growing, or I would say that it's still maintaining, then you can look into the con loss. So you look at the last 3 years, if the trend shows like between, let's say 10 to like 13% or whatever, so you just put in roughly a percentage for the trend, about 15%. Okay, so again, okay, this is for the trend. Then you also allow for some growth. Okay, so this growth also depends on the current year. Now, let's say like example for this year, is there any event that may take place or not? Like example in East Coast, we have this one called like a Visit Kelantan year, right? Visit Terengganu year, or Visit Selangor year. So if they have this event that is taking place, then you may also need to add in what they call this adjustment. Okay, clear? Because, okay, like example, recently in Bukit Bintang, they have the water festival. Yeah, their water festival, right? So the water festival itself, they brought in something like 500 over million, what call this, revenue, all right? So imagine this water festival also benefits a lot of business around the area, Imagine the hotels are all fully booked. Okay, the shopping malls are all full. So because of all these event taking place, the insured, based on the previous year where there's no such event, so their business is so only, maybe the hotel, let's say, is only maybe about what 70% fully occupied. 70% occupancy rate. But because of this festive, water festive and so on, now the rooms are 100% occupancy. You see that? So that itself, you need to take into consideration when you work out the con loss. All right. Okay, this 10% margin is only, it's not compulsory. This is only just an add-on only. Just to be on the safe side, we just add in 10%, right? This time, there's no hard or fast rule. You want to put 10% also can. You want to put 15% is also fine, no problem. Like I mentioned, even if you put 10%, the sum insured comes to 5.3, right? No problem. I told you, con loss, you can over-insure. No issue with that. So let's say now you put 5 million. So end of the day, if let's say our friend declared to us that the actual gross profit was only 4.5 million, then we will do the endorsement, we refund. Okay, no issue with that. So 10% is not compulsory. It's just only a guesstimate, for I mean, just for the purpose of just adjusting the sum insured. Okay, GH. All right, next one. Let's see what we have. Okay. All right, one last one before we take a short break. Is it okay? This Q&A.
Let's do that.
Okay, sum insured. Okay, ini either A or B, yeah? Either A or B, okay? Sum insured gross profit, either based on addition or different basis, huh? Okay, A, addition, need to specify the net profit interest standing charges. Different basis, need to specify all standing charges. Mana satu? Okay, answer is 6A, yeah? Okay, you're right. Okay, Hong, okay, you're right, yeah? Answer is A, yeah? So, addition basis means the interest standing charges plus net profit, right? Okay, annual gross profit is 5 million. If the IP selected is 9 months, the sum insured should be, okay, your answer A is correct. Okay, what about number 7? 7 dah tunjuk ah. Okay, the minimum sum insured is 5 million, right? So if they choose like 24 months, that means it has to be 10 million, or 5 times 24 divided by 12, then you need to double. Okay, if the MD covers multiple item at same location, average base rate, so the formula is the premium of all the items insured over the total sum of all the items insured. Betul ke? Okay, number 8, betul ke? Total premium of all the building, machinery, and stock over the total sum insured of your building, machinery, and stock. Betul? Okay, true, huh? All right, number 8. Okay, Japan. Okay, true. Okay, what about 9? So if the sum insured is inadequate, the average cost may apply to reduce the claim. Betul? Number 9. Okay, true, huh? Right. Okay, ini tak apalah, ini skip. Alam itu nama salah masuk sana. Sorry. Okay, ignore number 10. Sorry, number 10 tu. Okay, how about 11? Ika, ini tak apa. Ika, ini skip. Okay, skip all. Tak apa ini. Kalau kau one typing error there. Right. Okay, I highlight to you. Okay, number 12. Number 12. FCL will respond if the peril causing damage is not covered under the material damage. So remember this one. In order for the CONOS to trigger, you must have a material damage claim under your fire policy or even under your risk policy. Okay, kalau tak ada. All right, so okay, let's go on to the next. All right, so I think after this next topic, Ika, next one. All right, so I got some more up to 17. Okay, never mind. Just now we start 9:30. Okay lah, lagi. Okay, sum insured under your corner is based on B, okay, Japan sudah ada. Alright, projected gross profit for the next 12 months. So the next 12 months, then we do some adjustment for the trend. We also look at the past records. So that itself will more or less give us an indication. But this is only projected. It's not the actual gross profit. So I told you just now, at the end of the year, they still need to declare to us the actual gross profit. Then we will do the adjustment. Okay, this one, the period of insurance is April to March. Okay, date of loss is August. Okay, business fully recovered 31st December. So the indemnity period will cease when? They choose 9 months IP. So it will cease. Okay, 15. Okay, 15. Okay, jawapan? Yeah, right. So whichever comes first. If that interruption exceeded the 9 months, we will pay the losses up to 9 months only. All right. So if they completed much earlier, then we pay whichever comes first. So this one, since they managed to rehabilitate much earlier, then we stop 1st January. Okay. The IP start from the date of fiscal reinstatement or what? Number 16. False. Start from the date of. Okay. So answer. From the damage, not from the from the date of loss, not from the date of reinstatement. Okay, FCL will continue to pay until the damaged property is fully rebuilt, regardless of the maximum indemnity period. Number 17, true or false? False, okay. Answer. No such thing as regardless of maximum IP. So it is subject to the maximum IP. Okay. So if you choose 24 months, means the 24 months will be the maximum selected. Anything more than 24 months, we will stop at 24. Anything much earlier, then we will stop much earlier. Okay. All right. So that's number 17. Okay. What's the next slide?
It will be the next topic already, Stephen.
Okay. So
just
we take a break. All right. We take a break and then we come back 10 minutes time.
All right, everybody.
All right.
So let's say now I'm giving 15 minutes short break.
Okay.
Stephen, in the meantime, can you try to, leave and come back in, and then see whether it works or not from your end?
This one, I think better don't take chances. I worry after I leave, I cannot come back.
Oh, okay. All right. So
I leave the
everybody
screen
will
because I
just take,
scared nanti.
we'll just take
Because this one
15
I use
minutes
a
break,
different
yeah?
screen.
Okay, everybody, we'll
Okay,
just take 15 minutes break, and then
okay,
let's all come back by 11:30. Okay?
Okay.
All right, everyone. Thank you.
Okay, right.
All right, is everyone back?
All right, can we see the slides? Okay, next slide.
That's up, right?
Yep.
Okay.
Okay, let's look at the next one. Okay, so everyone is back. Can I get some heads up from you people? Jom, jom, jom. Okay, yes, right. So let's move on to the next one. This is the extension. I call it at other people premises. So actually, the selling point of this connos is actually about other people premises, In any business, especially like manufacturing, they do have their suppliers. They also have their customers. Okay, and also depending on the utilities for their business. So in case if any of the insured perils happens at any of these premises, may also trigger their connos policy. So earlier I did mention the fire must trigger the connos, but because this one happens at other people's location, it will not actually affect the fire policy at their location, but it actually trigger the connos. So by virtue of the waiver of the material damage, this connos will also trigger. Okay, so let me go through with you the supplier and all this extension. Okay, this one is an add-on. It's different from fire. This one nothing to do with fire. It's strictly only on the condos side. Okay, the first one. Okay, what we have here, the first one. Okay, this one is what I call this specified supplier. Okay, when you discuss this with your client, you may also want to share with them. You may want to check with them. Okay, who are your suppliers? Okay, so let's say like we use Proton as an example. Now, Proton, they are actually assembler of this motor vehicle. Yang lain nanti Ika, we go one slide at a time. Okay, you check, let's say like Proton, you ask them who are your suppliers. So they are going to list down quite a lot, because to them they are only an assembler. So all the components they source from the supplier. So imagine for a car, it's an automobile, a Proton, it makes up of various components. So first thing first, you ask them, okay, who are your main supplier? So the first one I would say is the chassis. Mesti ada itu badan dulu lah. So the chassis is what they call the cold roll lah. So this cold roll, you ask them okay, where this cold roll comes from. So whether it's locally sourced or whether it's from overseas. Okay, so they tell you if this cold roll is locally sourced from some of the supplier in Malaysia, then you list down, okay, let's say company A, supplier of this cold roll. So you may want to also ask them, how much are you dependent on this supplier? Meaning, if this supplier don't supply the coral for you to do all those assembly, how much will it have an impact on your business, on your profit? So for Proton, let's say if they only have one supplier supplying this coral, if anything happens at the supplier premises, everything burn down, and they're not able to supply the coral to Proton, Proton cannot do anything, So that one easily will make up like 100% of their loss, They cannot do anything. Okay, if it's only one supplier. So other than the cold roll for the chassis, the next one you may also want to check with them. Okay, what about the engine? So the engine can also be locally, it can also be overseas, depending on okay, where they source from. So number two, then is the engine. So you ask them again, this engine, what is your dependency on this engine? Now you got the chassis. If you don't have the engine, then what? So again, this if there's only one supplier of this engine, it's going to have a big impact on their business as well. Okay. So next one, you ask them, what about the paint? Because for car also must have the paint, right? Then you need all the tires. Then you have the windscreen, and then you have the line. The line means all the emblem, the logo, those kind of things. So this one actually makes up the supplier. Faham? So this supply extension is only valid now for Malaysia, Singapore, and Brunei only. So if the supply is from Japan and other countries, this supply extension we don't extend. Unless you're talking about special rating. So special rating, you can request for the additional supplier from overseas. If it's only strictly fire tariff itself, under this con laws, we only limit to Malaysia, Singapore, and Brunei only. Okay, you got it? So this supplier can be specified supplier. It can be also unspecified supplier. So specified means you need to name us the supplier name and the dependency, percentage of dependency. Unspecified supplier means dan line. The one you don't have to give us the name. So dan line means, example, all the engine oil, the spare, what I call the spark plug, the emblem, those things, those are considered as unspecified supplier. Okay, so we have a different rating charge for your specified supplier. We also have a different rating for unspecified supplier. Okay, so look into the ratings, it's all there. So if I'm not mistaken, specified supplier is 0.25, whereas the unspecified supplier, the rate is like 0.5. Okay, so these are the additional premium we charge into your con loss. Okay, all right, next one. Okay, next one, we have these specified customers. So now you check with Proton again. Who are your main customers? So in this case, they will tell you, okay, number one, our main customers may be, okay, through through their distributor, which is under this ION distributor. So that will be the main one. If anything happens to their distributors there, what is the impact on their gross profit or in terms of their business? It's going to be quite a serious one. If you don't have the distributor there who is not able to sell the cars to the consumers, so this Proton may have a serious impact on their business. Okay, then other than that, we ask them who are the other customers besides these distributors. Then number two, they will tell, oh, we also have this taxi. This taxi where we assemble and specially spray painted according to the white and red color for the taxi company. Okay, so this taxi company is their customer as well. One day, if anything happened to the taxi company, they decided to cancel all their orders. Now, Proton already got the order to assemble this Proton and then to spray into white and red color as a taxi, right? So if anything happened, this contract cancelled and so on, what happened to Proton? They will not be able to sell the cars, If you are going to be the customer, are you going to buy a car that is in black, in red and white color? I don't think you want that, correct? So that may be a loss to Proton. Next one, again, we ask, who are your other customers as well? We also have those like the leasing company that lease our cars and so on. We may also have this from the corporate itself. So let's say like Sompo, maybe some of the company cars, you may have bought it directly and so on. And of course, the other one is talking about export market. So who are your other customers? These are the export market, where we also send our cars to overseas, example. Okay, so there's your specified customers premises. We don't have unspecified one. So we have unspecified supplier, but we don't have these unspecified customers. Okay, so these specified customers also need to list down what is the percentage of dependency. Okay, are you clear? So that's your customers extension. So the rate that we charge for this one is premises specified customer is 0.15. Okay. Okay, you mean due to our customer, our business will be affected, we can extend to cover customer, fire happen to our customer? Yes, you can. All right, any hi-fi advisory. Now, if you're talking about this customers extension, number one, you must buy this extension first in order to make sure that anything happen at your customer's premises, all right, affects your business, then you can file a claim. Number two, very important is that the perils follow your policy here. So if your policy here covers fire and flood, example, so if your customers there suffers any flood damage and so on, affect your business, yes, you can claim. But if your fire here, you didn't extend to cover flood extension, but your customer there flooded, the one too bad, it doesn't trigger the con loss. Okay, it must follow your insured perils under your fire policy. Okay, now these customers, it all depends, Hi-Fi. Is it your main customers? The main customers means the one who actually, the business where they contribute a lot to your profit. Then you add that in. If it's a minor, then you don't have to. Okay, let's say like example in your agency business, among all the portfolio, your fire, your motor, your engineering, marine, and so on, you ask yourself which one actually contribute more to your commission? Example, you tell me. So if you think that motor that contributes to mainly to your commission, right? So motor will be one of the main one. Faham, ah? So that is example, the customers. You can also specify the customers as long as the contribution to your profit is quite substantial. Then it's worth to put it. All right, so for this, for hi-fi, how do I address you? So if you're talking about like a service industry, service, so let's say your customers, policy holders, that one I don't think necessary. Okay, here we are talking more to those like manufacturing where the customer base is huge. So any losses affect there can affect your business here, then you insure. All right, policy holder, I don't think, I don't think we cover for services. For products, yes. Okay ini apa namanya? Oh, Helena. Okay, Helena. Okay Helena. Right. Next one. Oh, you boleh zoom in Okay, next one is your prevention here. Okay, next. Okay, this one is your unspecified. This unspecified supplier, this one done line. This one you don't need to specify the name. As long as at the end of the day, if anything happens at any of the unspecified suppliers, if they can prove that, if Proton can prove that they also get the supply from these small suppliers, and that also contribute to their loss, then we will make the claim from here. Okay, so your this rate is 0.75. Very high, 0.75, because unspecified can be just any suppliers. Okay, specified we limit to the names that you mentioned, but unspecified can just be any suppliers, okay, who supply any components to Proton. That's why the rate is higher. Okay, next one you have is your this prevention of excess. Again, this is external. Now, if let's say one day any of that flood example, that occurs within the vicinity of the premise, and customers are not able to access to the insured premises in a normal business and so on. So that itself will have an impact on their business. Okay. Now, other than this prevention of excess, other than this one, usually I would say is like it can be flood, it can be a fire, anything. Now, that recently we had this the fire explosion in Putra Heights. So that one the same thing, because of that fire explosion that affects the surrounding region, right? So a lot of the business there has to shut down because that authority actually blocked the road, okay, for people to come into that the tragedy site. All right, so a lot of business are affected because the whole area was blocked for almost like a month. So because of that, they suffered quite a lot in terms of the loss of income. So this was an example, prevention of excess. Okay. So this is also referring to something external. Yeah. Okay. Next one. All right. This one we have this public utility. All right. In any businesses, of course, we also check with them. What are you fully dependent on? So let's say for a manufacturing, let's say like for a hotel. Now hotel. We have three type of utilities. One is power, one is the water, and the other one is gas. So for a hotel business, usually the number one, they will depend on water and also the power supply. Okay, so let's say one day, if due to a power failure or due to the interruption in the water supply, and the hotel is not able to enjoy such facility, and then you know what happened? All the guests who booked the hotel already, those like individual hotel guests, or even from those travel agency, they fully booked the hotel, but because of this failure of this water supply and so on, so all the booking that was made earlier has to be cancelled. So the tour company cancel all their booking, even the seminars in the hotel all cancel, function or whatever in the hotel all fully cancel, you see. So because of all these cancellation, the hotel will suffer in terms of loss of income. Okay, so we do have a 72 hours time access, which I mentioned. So let's say if the power failure, the water supply failure occurs for up to 72 hours, the first 72 hours, they cannot claim. There's a time access. So it's only after the 72 hours they can account for the loss of their income, then only that one we will pay. Okay, so 72 hours, I would say, is quite a long time, 3 days, based on our Malaysian experience, I don't think we are up to 3 days of water supply power interruption, correct? So if you want to bring down to 48 hours, means 2 days, also can. We charge you 50% loading. So if they want to bring down to 24 hours, we charge 100% loading. Okay, so the public utilities, it can be 0.02 up to 0.035, depending on the utilities that they chosen. Got three utilities, so out of three, the hotel will choose two, water and the power. Okay, some other manufacturing premises where they also rely on the gas, so they may need to select three utilities. Okay, power, water, as well as the gas. Okay, they can also choose one facility if they want to. All right. So take note, all these power supply, if you are talking about any fire, any insured peril that happens at the substation, okay, causes interruption to the insurance factory, the one is okay. That's within the coverage. But if you're talking about transmission line, let's say if the whole transmission line collapse and then causes power interruption to the factory, the one transmission line, we don't cover. Okay, so that's your public utility, water, electricity, and also the gas supply. Right? Okay, next one. Okay, this one we have this murder, suicide, infectious disease, and so on. Now, same thing like the hotel as well. So if there's any murder that takes place in the hotel or even a suicide that takes place in the hotel, right? Same thing. The minute if there's a suicide or murder that took place, first thing first, the authority will come in. They will then cordon the whole hotel. You see that? So maybe for the next 1 week or so, pending all the investigation and so on, the hotel may lose a lot of their customers, okay? Because of the murder, because of the suicide that took place in the hotel itself. This murder suicide got no fire element one. Unlike just now, the other policy, the other extension, you must have the insured element. But this one, no, this is only about an event that caused by either murder, suicide, or even the disease. Okay. Now, last 2 years when we talk about COVID, so because of the COVID, a lot of hotels suffer zero occupancy rate. So that time, a lot of people ask, hey, COVID covered or not? Those days, we don't cover COVID because the time COVID is pandemic. It involves like worldwide. It's a worldwide kind of catastrophe. This one, we are talking about a disease that is contained in that hotel only. So if let's say any of the guests who happens to stay in the hotel and then suddenly develop a high fever because of all the dengue, that kind of thing, and then the hotel needs to be shut off for temporary period, that one we cover. Okay. So that is murder, suicide. Now, this type of risk is this extension are very good for hotel risk, hotel risk, restaurant and so on is good. So if today you're selling this fire to any hotel, accommodation or even like restaurants, this is a very good extension. You tell them any murder, any suicide that take place in your hotel, in your restaurant and so on, affects your business for the next 72 hours or even like 48 hours, depend. So you may also be able to file a claim under your condos. You see that? Without this one without a fire element on, just only an event just like that. Okay, so these are all the extensions that we can build into your con loss. So earlier I told you your premium for this con loss can increase tremendously just by putting in this extension over and above your fire and perils, So your premium, I tell you, is sizable. Okay. And of course, a lot of people may ask, what about claim? When it comes to claim, then how? Fire, we can more or less can assess that repair, the replacement cost, right? So by looking at all the physical damage. But what about con loss? People worry, what come to claim and how? Don't worry, when it comes to claims, all right, the adjuster will be the one that will look into the claim aspect. So what you need to do is just to advise the client, make sure they got keep proper records. Okay, because when you talk about financial losses, everything must be justifiable. Okay, so they need to justify through all the accounts or whatever that they have. That's the most important. Now, another one that you may face is especially those dealing with those Chinaman business. Chinaman got two set of accounts on, right? One is under the table, another one is over the table. Over the table, they declare income tax. Under the table, which they make more money, the one they put under the table. Okay, so if you come across such client, which one do you take? Over table or under table? Two sets of accounts. Okay, over or below? You go for the audited one, right? So if they audit the one that is for income tax purpose, you take that one. So if they under declare the profit is the problem. So really later on when it comes to claims, if seriously we found that they have underinsured their gross profit or whatever, then we will apply average. Okay, so use the auditor. Under table is something like it's illegal. All right, so that is the extension under your con-laws. So when you sit down with them, take advantage of this extension that we have for you. So you try to convince your client. These are one of the very good selling point. It's not only at your premises, it's involving other people premises. Okay? All right, next one. No question on this one? All right, so a quick one, just true or false, or A or B. Okay, in addition to the fire perils charged for con loss covering the insured own premises, separate fire peril can also be charged for extension covering supplier, correct? Besides your fire policy, we can also cover, correct? Specified supplier, unspecified public utility prevention and access. True, okay, good. Okay, jawapan, right. Okay, time access, 72 hours for this extension can also be reduced to 24 hours, subject to which loading? So any answer A or B? Ini bukan true or false, A or B. Okay, B, right, let's see. B, all right, B, 100% is for 24 hours. If you're talking about 50% loading, the one is 48 hours, all right? Okay, next one. FCL automatically cover loss arising from damage at unspecified supplier premises. Automatically covers. False, okay, good. Okay, jawapan 20. So false, all these suppliers, whether it's specified, unspecified, is an extension. We don't cover them unless by extension. Okay, good. That's number 20. All right, next one. Okay, unspecified extension is confined to location within the territorial limit of Malaysia, Singapore, and so this one I did mention to you earlier, and okay, and Brunei. All right, answer. So if they have these suppliers or these customers from Thailand, then how? Under your tariff rate, tariff which is below 10 million, we follow your tariff accordingly, Malaysia, Singapore, and Brunei. But if this is under the special rating, that means if the technical rating committee deliberate on the rates, you can also request to add in these customer or supplier in other country. That means in Thailand or even from Japan and so on. That's only for those special rating cases only, right? Above 100 million. All right, so all this supply extension, we limit only to 10%. Okay, so you tell us if the supplier, let's say this windscreen supplier, you put that dependency rate is 10%, then you put 10%. Okay. Right, this one, okay, 22. 22 already the same question just now. Okay, 22. Okay, B, 22 answer the other tadi. All right, next one, 23. All right, this premium adjustment clause is allowed subject to provisional premium of 50% and adjustable will refund premium or not more than. Okay, any refund, we will still maintain the minimum of how much? Okay, answer. 23, answer. A. Okay, A, so we still retain 50%. Earlier I mentioned, con loss, you can over-insure, but do not grossly over-insure. Because if you grossly over-insure, whatever refund, we will still maintain 50% of your provision. Okay, so just plus minus like 10-20% is fine. Okay, does it cover losses if their computer system is locked by a hacker? Hacker, we don't cover one. Okay, ini siapa ni? We don't cover this. This one maybe will come under your cyber insurance. Okay, ini siapa tadi? Okay, con loss is subject to 3 tiers rating. Tariff rate, sell rate, and special rate, as in the fire, depending on the combined sum insured for both policy. Okay, so number 24. True or false? True, huh? Okay, so true. Right, so jawapan 24. All right, I tell you another method. Let's say if the insured already got 8 million on the fire, right? So you need another 2 million to make it to self-rating. Now, the difference between the self-rate and the special rate is the discount. In the tariff rate, where it's less than 10 million, we only allow discount only for the FEA. That's about it. Now, if you can convert this from tariff rate to self-rating, now self-rating in your fire, there's further discounts given for those like new building up to 6 years old. We also give discount for that special perils. We also give discount for the FEA. Okay, we also give discount for the security. So with all this discount, especially on the perils itself, we reduce by 50%, The tariff rate, full peril is 0.145, But when you convert this to self-rate, 50% off is 0.075. Plus the other discount for security and so on, I tell you, is 0.1. The rate, I tell you, is going to be vast different. Okay, just a matter of 2 million difference, So what you do is that if the fire got 8 million, you just add in, you work backwards, put a con loss 2 million. Okay, put one side 2 million to make it 10 million. So once you get the rate under your fire, there's so much. So that 2 million con loss, I tell you, the savings that you generate from all this discount, you can also use the savings to fund your con loss of 2 million. You know what I mean? No need to pay extra, Whatever saving generated, enough to fund the con loss of 2 million, fire plus con loss 2 million, 10 million, self rating. So you can proudly tell your client, you take up this fire from me, buy one, I free one con loss for you. I maintain your fire 8 million, I free one con loss for you. You see that? So if your saving generated, let's say, is quite substantial, like 0.1% is a lot of money, 10 cents. So if let's say the what I call that, the discount that you generated can fund the con loss, still got balance, can fund the other policies. I use that also. Don't discount everything to the client. You tell the client, you buy the same fire, I maintain the same fire, I free two policy for you. One is free one con loss, another one I free one, maybe one public liability for you. You see that? Buy one, free two. And if the saving you generate still got balance, offer them some more. Buy one, free two. I give you another touch and go, 200 ringgit, example. You know what I mean? So you see, you can use this as a marketing tool, Clear? So that is example of what you can do with the con loss. 8 million fire, 2 million con loss combined, 10 million. Okay? All right, next one. Right, let's look at the clauses. Okay, con loss has their own group of clauses. Okay, and these clauses I mentioned earlier is more like already defaulted. These clauses apply across the board. Unlike your fire, certain clauses meant for building, some for machine, some for stock. So we need to be selective. But in the case of this con loss, is a default clauses. Okay, so let's look at the next one. All right, maybe you can also zoom in. Okay, we look at the first one here. Ini, Sam Dabi punya. Okay, this is what they call the interdependency clause. Sometimes, in terms of their business, they can also suffer in terms of their loss of income from their own group, if they are dependent on each other. Okay, let's say like example for Sam Dabi, right? They are a conglomerate. They got so many companies. They got all their subsidiaries, their sister company. Now, example like Sam Dabi. Okay, Sam Dabi is the holding company. So usually Sam Dabi will be the one that arrange the insurance for their whole group. Can we have one fire and 4 con loss? Okay, one fire policy cover all and 4 different con loss policy. Boleh ke? Satu fire, 4 con loss. Boleh? Boleh juga. If you can segregate the 4 different companies using their own individual P&L account, better still. If you combine all, when it comes to claim debt, we also need to segregate now which one belong to which company. So you can have 1 fire and 4 con loss also can. Can we have 3 fire, 1 con loss? 3 fire and 1 con loss? Boleh? Boleh juga. let's say your building is insured, let's say through the bank mortgage lah. So the bank will take up to cover your building, right? So that's one. Then number two, your machinery, assuming also under hire purchase, so that finance company also arrange a policy to cover your machinery. Then your stocks and all your renovation that you have on your own, right? So that one you take up your own policy. All right, your stocks and so on. Now you got building, machinery, and stock all in the same location. So anything happens to the building, machinery, or stock can cause interruption to your business. So now we issue one con loss. We will mention the three correspondent fire policy. Clear? So your con loss we mentioned are issued in conjunction with, then we quote the three policy. Also can. All right. Can we take up a fire with Sompo and then let's say, can I take up a fire with company A and then con loss with this Sompo? Boleh ke? Fire dekat sana, con loss dekat sini. Boleh ke? Boleh. Fire sana, con loss sini. So when we issue the con loss, we mention con loss issued in conjunction with company A policy number. Actually, technically, not to say you can't. You can also, but for company, of course, they would prefer to have both. Now, if you are the fire insurer, fire may have to admit liability, right? So if the fire they say no pay, your con loss no pay one, So I don't mind having the con loss without the fire, honestly, because I wait for the fire to say yes, then I pay. If fire say no, my con loss may not say no, So technically, of course, not to say you can't. As long as you got a fire and con loss, you can. But in practice, company would prefer that you have both together, fire and con loss. So for at least for easy administration. So before we actually register the con loss claim, at least we also must have the fire to admit liability. Then, for the sake of convenience, that kind of things. So if you want to arrange that, you can. What you do is that maybe you arrange on a co-insurance basis. Since you got two principal, right? So you combine, let's say now fire with another company, you want to take up consortium, right? So you combine the two. So maybe you say, okay, I go on a co-basis. So maybe like 80% I give to Sompo, 20% fire con loss, then I give to the other insurer, also can. All right. This one, Lika Sim, of course, I told you just now, if you say fire here, con loss there, or con loss there, fire here, no problem. But if you want a con loss, I would prefer that you come together with your fire. Okay, at least a fire policy. Now, let's say the other company, you cover the building with through the bank, right? Okay, the fire is there, no problem. But your machinery and stock, take out with Sompo, Sompo machinery and stock together with your color, that is fine. At least a fire policy. Boleh, yeah. So let's say if you have those like renovation, so if you want to cover just the renovation, at least you have a fire policy here. Okay. Okay, Ali, kalau company mau kalau ini berasingan dia tak mau lah. Kalau sekali, okey lah, boleh. Asal ada fire policy sama dengan Colos, itu okey. Okay, now let's go back to this. Sam Gabi will be the one who is going to arrange all their group insurance. Now, you see, we also have Sign Plantation and Sign Property. Sun property is the housing development. Sun plantation is their plantation. So you see, after they harvest all the palm, all those palm oil and so on, all the oil palm and so on, then the land, Sun property will buy the land from Sun plantation. You see that? They are interdependent on each other. So if today anything happened to the Sun plantation, the land, let's say, due to earthquake or anything, the land cannot be used for development. So Sun property usually buy the land from this Sun plantation, So now Sun property without the land, what happened? A lot of the sales could be cancelled, So any of those house purchasers who already paid for the housing and so on, right? And you send cannot deliver because they don't have the land to build. That's it. So they may also suffer a drop in terms of their business. Okay. Now, Sun plantation also depend on Sun plantation and the Sun property also depending on the heavy equipment, The heavy equipment group, example, those like excavator, the forklift and so on. So all this plantation, they need all the excavator, everything to clear the land, to do all the harvesting. At the same time, like Sun plantation, this Sun property, they also need all the crane excavator and all these things during the construction work. You see that? So that's example between Sun property and Sun plantation. Okay. Then we also have Sun logistic. So let's say all these building materials, then SMW also they import all those vehicles, right? They import a BM lah, Mini Cooper lah, Hyundai and so on, right? So all these cars they imported from overseas, they also have some logistic. You see that? So this sun logistic also depend on this heavy equipment, depending on this import of these vehicles for their business. You see that? So if today anything happens to any of the heavy equipment or that vehicle, so the sun logistic may also suffer in terms of their drop in business. Okay, sun logistic. Then the sun property also depending on the sun index. You know sun index? Sun Enex, they are the one who supply all the sanitary wares, all the toilet bowls, the basin, and so on. So imagine with the property section, they also depend on all the sanitaries. So today, anything happens to the factory that supply all the sanitary wares, so all the basin, everything damaged in a fire. So if Sun Enex cannot supply all these toilet accessories to Sun Property, and Sun Property cannot install all these, what happened? So any delay in the project or even cancellation of the project will also have an impact on their business. Okay. Now, Sun Property also depend on their paint. You know, this paint manufacturer, last time they call it Berger Paints, or after that they call it Par Paints. So all this paint factory, their factory, they also supply the paints to the automobile division. They also supply to their property division. Okay, and then you also have this Sun Sembawang or Sun Engineering. So this Sun Engineering, they are doing all those heavy, they are doing this fabrication work. So any factories which set up by SMW, they also depend on the Sun Engineering to do all the fabrication work. Example, okay, and then we also have the Sun Healthcare. We also have the Sun, what they call this SGMC Subang Jaya Medical Center. So all these medical center also depends on the SMW group, So let's say they got 30,000 employees. So the first option, if any admission required, must be SGMC. You see that? So this SGMC are dependent a lot on this on the group employees for the business. Okay. Then the last one we have Sign Broker. Sign Broker, I tell you, Sign Broker, maybe 70% of their premium comes from the SMW group. Their market share maybe 20-30%. So 70% comes from the SMW group. Imagine if one day SMW group, let's say for any reason, they decided to stop supporting Sign Broker. Sign Broker will lose 70% of the dependency, Okay. So these are just example of what they call interdependency clause. All right. Okay, next one. We look at the departmental here. Okay, departmental. Okay, departmental, example like Ion. Ground floor, they have their supermarket. Then first floor, they have maybe their ladies department. Then second floor, men's department. Then third floor, maybe children department. And then the fourth floor, maybe the electrical department. Okay, so based on the 1 year, maybe the Ion will declare, okay, this year we make like 50 million profit. Okay, 50 million profit across the board, Now, let's say 50 million, let's say maybe equivalent to 30% of their overall revenue. They declare 30% of the revenue, right? So when a fire happens, we also want to find out how much did the ground floor contribute to the profit. How much is the first floor? How much second floor? So if you look across the board, not every floor contribute the same percentage to their profit. So maybe you look at the ground floor, the supermarket contribute 40% to the profit. Okay, then if you look at the first floor ladies department, maybe contribute 35% to the profit, right? Then the men's department only contribute 10% to their profit, example. Okay, so if a fire happens at the men's department where the contribution is only 10%, we cannot use the 30% which they declare as the profit, we don't. So we will look at the floor itself. If the men's department contribute only 10%, then we will use the 10% to work out the claim. So if let's say the ground floor, the supermarket, which contribute 40%, we cannot use 30% because if we use 30% means we have actually short paid them. You see that? Their profit is actually based on 40%, not 30. If we use 30, that means we underpaid. We use the 30 on that men's department, we overpaid. You see that? So we will base on the individual. Okay, Crystal, you say SGMC no longer belongs to SGMC. Maybe they are, no, I mean, the name is still SGMC, so maybe they are not the majority shareholder. Lah. I think they're still a partner, maybe not the majority. Lah, huh? Okay. All right, so that's example, what they call this, departmental. Huh? All right, we go to the next slide. Next slide, next slide. Go to the clauses already. The rest no need to go so much. Okay, we look at the clauses here. Okay, first one, this payment on account. So this one I mentioned this morning. If you have a con loss policy, once the fire admitted liability, the con loss insurer will try, not to say try, they will pay an upfront, let's say like 20%, to ensure that the insurer can still operate the business temporarily at another location, okay, in order to generate some sales, to help them to at least pay for some of the fixed expenses, you see. So on one hand, the factory is down. On the other hand, they are still able to generate some sales from a temporary location elsewhere. So all these is actually the money that comes from the con loss. If let's say your con loss insured for, let's say for 5 million, so maybe we'll pay like 20% upfront first, okay? So after all the final adjustment, let's say come to 4.5 million losses, the 4.5, then we will deduct that upfront that we paid out. That's it. Okay, so that's good thing about the con loss. Okay, in terms of this departmental, which I already explained just now, right? We will look at the individual floor to work out the percentage in terms of their contribution. Okay, just like example, like let's say like a company, let's say like Sompo, okay, end of the year we declare, okay, we make like maybe like what 40 million underwriting profit. Okay, example, across the board, Sompo declare 40 million underwriting profit. But if you look at the individual portfolio, not every portfolio contribute 40%. So if you say like fire, maybe contribute like 45% of their profit, all right? Motor, maybe minus, lose money, okay? Maybe medical contribute only what, 5%. Then maybe your liability contribute 30%. Your marine maybe contribute maybe 20%, things like that. So when it comes to claims involving the fire department, so since the fire contribute like 45%, we will use the 45% to work out the claim. Okay, so if the fire, let's say, happens at the motor division, the motor, as you know, lose money, right? So means no profit. We will use the zero as the calculation. Okay, so that's example like what we call departmental. All right, this upward adjustment is just like your escalation clause. In case of under insurance, all right, we do have this upward adjustment where you may need to pay a premium in order to increase your sum insured according to the percentage that you selected. Just like your escalation, if you put 20%, so we will increase your sum insured by 20% on a daily basis. But when you talk about con loss, let's say you put that 25%, so it comes to a claim, if there's any under insurance, then we will top up by the percentage that you have added into your policy here. Okay, so that itself will help you to reduce the under insurance, or even you can actually, maybe you can also waive the under insurance. Right, so that's upward adjustment. Okay, interdependency, I already explained to you just now. Stock accumulation, example, when a claim happens, a fire happened in the factory, the insurer may still have some stocks that is kept at another warehouse. So all those stock that they have already manufactured, so if they use that and they use that maybe to what I call to produce some, to generate some sales. So all those profit from the sales will also be taken into consideration. Okay, so new business clause, remember I told you just now, any new business, even they started the business less than 1 year, doesn't matter. What we do is that we will just put in the new business clause. So this waiver of material damage, remember I told you, for the con loss to trigger, the fire must admit liability. That's only at their own location. Okay, so today my own location, I cover fire and all the perils. Anything happen due to the insured perils, it will trigger the con loss. But when you're talking about other people premises, example, those like supplier premises and so on, that one may not affect your location. It's other location. So we may apply what they call this waiver of material damage. Okay, so again, any salvage sale during during the fire claims, so any of these salvage, that means any amount that they get from the salvage, all these will be taken into consideration when you come to claim. We will deduct this from the claim itself. All right. Okay, next one. Let's see the answers for this one. So you tell me what's the answer. Huh? Okay, next. All right. The first question
Sorry,
you may ask.
Stephen. For this part, they all
Yes.
have the answers. I didn't tutup.
Oh, semua ada. Okay lah, tak
Yes.
apalah, masa pun dah masa pun dah sampai lah.
Nah,
Okay lah,
that's
no
only,
problem. Huh?
guys.
Okay, tunjuk saja ya. Okay, one by one, tunjuk saja. Okay, one. Alright. On the left side, agents, these are the questions that you should ask them, right? So on the right side is just to explain to you why the need for such clauses, okay? So like this example, you ask them, if a fire happens, example, if a fire happen, okay, you may need to pay, you may need to take out your cash to reinstate your building first, but what about con loss, okay? So if you have a con loss with this payment account, the company will pay you an upfront. This is, of course, this is a separate issue from your fire. Okay, so that is the clause. This clause, free one, free clause. Okay, next one. What if your business stop but your premises are not damaged? Okay, so your business can stop because of the supplier, because of the public utility, and so on. Because of what happened over the other side affect your business. Okay, so that's example waiver of material damage. So this clause also is given like it's built in. It's also considered like free. Okay, if one department stop, do others still earn income? Just now I mentioned that Eon supermarket, even if the ground floor, there's a fire at the ground floor, the upstairs is still operational as usual. Okay, so we will work the claim based on the ground floor only. Okay, if one section shut down, will the whole business be affected? Okay, so this one is your interdependency. So I told you just now, one section may affect the other section. Like example, Sime Property, Sime Plantation, Sime Hyundai, so many Sime. Okay, can the damage of finished goods still be sold at a discount? Okay, any upper clause? Okay, salvage sale. So any salvage from there can also be used to offset from the claim. All right, stock value increased during the peak season. So I told you, you may still have all those finished stocks that has been kept in the warehouse. Okay, so when a fire causes interruption, whatever stock that is still available, we will still use that in terms of our claims. In terms of claim settlement. Okay, are you expanding, starting a new branch, or launching a new product? Okay, it's a new business clause, right? So is your turnover growing faster than what was declared? Okay, so this is the upward adjustment. Only this one you need to pay a premium. The rest is more like, I would say it's free. It's already like defaulted. All right, so that is the clauses. Okay, next one, indemnity period, and multiplier. All right, show me the slides. Okay, I hope you remember what is IP already, indemnity period. That means is we want to know how soon will the business be back to normal from the date of the loss. Instead of asking them how long it takes for them to come back, tell them how soon. We want you to be back as soon as you can. Okay, so IP already explained to you. Look into the building, the machinery, the stock, the manpower, and so and so on. So come up with what they call the IP. So this IP itself, we also have what they call this multiplier. Okay, let's see. What is this multiplier? Next. Okay, multiplier. Okay, this multiplier is only for gross profit, gross revenue, gross rental, as well as the wages. So if you're insuring on the auditor fees, on the accountant fees, the one got no multiplier one. Okay, right, next one. Okay, if you look at this multiplier, it's like 75%, 90%, and so on. So do not take this one as one of the marketing tool. Sometimes when you look at it, since this premium we charge is 65% only. Why not we use the IP this 60 months? Why not we charge 65%? Don't, because even if we charge 65% of your premium here, but the sum insured here is increased by 5 times, All right. So if your annual gross profit is 1 million. If you choose 60 months, that means you've got to take 60 divided by 12 times 1 million. You need to insure like what, 6 million, you know. Okay, it's not 1 million. It's 6 months, is 16 months, what? 5 years. You need to insure for 5 years, you know, means 5 times that annual limit. You got it? So even if we charge you like 5 million times 65%, no? Okay, but why are you insuring 60 months? When we know, let's say we know the fact that maybe they take about 24 months IP, what's the point of insuring 60 months? I told you, whichever comes first. So if they manage to get the business back to normal within the 24 months, your balance of 60 months is no longer payable, you know, you see that. And then even if you put like 60 months, you know very well it won't take 60 months. Okay, so do not put in what I call the IP that is do not just take advantage of this percentage just because you want the premium to be lower. All right. Okay, next one we look at the premium, how we charge. Okay, example, answer. I can show the answer straight away. Okay, you see, imagine this one 1 million. Okay, 6 months IP, 6 months, we still use your annual gross profit. So your premium is 2250. This one, if it's 24 months, you see the sum insured, we increase by 2 million. Okay, so your premium is 51. Clear? So the multiplier, it depends on the IP selected. Okay, next one. All right, this average base rate and the overall premium. Right, earlier I did mention for your fire, there could be different items insured, different rate for building, different for machinery, different for stocks, and sometimes you may have 3 different locations. Okay, so whatever is it, when we talk about this average base rate, we cannot take too low, we cannot take too high, we take something like what they call average. Okay, so let's see the premium here. Okay, next one. Okay, tunjuk saja. Next one, next one. All right. So this is your base rate, tariff, swell rate, and special. Okay, you look at this one. Let's say this one policy, I cover building, the rate is 0.644. Okay, then I cover the plant and machinery, the rate is 0.72. Why 72? Because you look at it now, we charge spontaneous combustion, we charge the EICB, okay, EICB for machinery. Building got no EICB, that's why the rate is different. Then when we charge for the stocks, because the stock also got spontaneous combustion, so because of the spontaneous combustion 161, the rate also is different. Okay, so which rate are you going to charge for your con loss? Are you going to use 644 or are you going to use 72 or are you going to use 825? If you use the rate 64 because you want the business, right? Okay, now you got 64. Later on, when we work out the average rate, it's more than 64. So now assuming you charge the client 6,004, so after that, later on when we issue the policy and so on, the premium comes to 7,000 plus. You go back to the client, you tell the client, sorry, brother, we charge you the rate wrongly charged. Your premium should be 7,005, but we charge you 6,004, right? So can you pay us the difference of 1,000? The client will not be happy. In the first place, you already quoted me at this 644. Why must I pay additional premium? They may not be too happy, you know. Now, on the other hand, if you charge 0.825, okay, you are not wrong. 825, you are not wrong because the rate charge is more than the average rate. But if you charge 825, you may not get the business. Because if the other agent who know how to work out the average rate, the rate is much lower. So if you're going to charge me something like 24,000 over, and the other agent only charge me, let's say, like less than 20,000, you may not get the business. All right. So if you manage to get the business later on, we issue the policy, premium is less than what you charge. Then you go back to your client, oh, Mr. Chia, sorry, we have overcharged you. If you say overcharge, of course the client may actually, at least it's a refund to them, But on the other hand, they say, why do you overcharge me in the first place? You see that? Why didn't you work out a proper rate? You overcharge me now, you refund me, I won't complain. But then I'm asking you, why are you charging me this rate when another agent from Sompo charging me a more appropriate rate? You see that? So what we do is that we use the average rate. Okay, so next one, let's see. Okay, so we take the total premium of this three items against the total submission of these items. So your average rate is 0.7598. So remember, just now, if you charge 0.644, now we issue this policy, the rate is 0.7598. Now the client got to pay another 1,000 extra. They may not be too happy. The worst thing is cancel my policy. You see that? So just now, if you use the rate 0.825, you have overcharged them. The rate actually is 7.5, you charge 8.25, right? So now you need to refund them. So it's not a matter of refund, it's a matter of principle. In the first place, why do you overcharge me? So if I don't know, then you keep quiet lah. Am I right? So if the client don't know, I take up from you, right? The client also don't know. Then why lah? Still we charge 8.25, I just leave it 8.25, no? You see, the client may have a wrong perception. Why are you charging me more? Or is it what? Because you want to earn more commission? It doesn't sound right lah. Yeah? Okay, so that's example of your average rating. Okay, right. You look at the premium. If today you look at the fire itself, already like 47,000. So I told you just now, morning, if you already issued a fire policy, your fire itself here already got 47,000 premium. Okay, fire sebelah tangan sini. Sekarang kiri, if you don't try to capture the con loss, the 21,000 here, a lot of money, you know. The fire is already yours. So why don't take advantage? Not to take advantage. Why don't take the initiative to try to close the con loss together? You see, your fine con loss can come to 68,000. You know, this 21,000 is just only a very rough estimate only lah. All right. So if a business where they generate a lot of sales, I tell you, the con loss premium can be 100,000 just like that. Okay, got it? So that is example of the combined premium of fire con loss. Okay. Right. Next one. Ada lagi? Okay. So the example of claim settlement. Right. So earlier I mentioned, don't worry too much about the claims itself. If the client asks you, then the claim how? That one we will leave it to the expert, usually the adjusters. So adjusters will definitely demand all the supporting documents, all the accountings and so on. So very important is to make sure that the client keeps proper records of all their transactions, because all these controls is all about facts and figures. Okay. All right. So let's look at some of the keywords. Just to understand this, just to understand the wordings better. Okay, this specification is a different basis. So you can see the word here. Okay, number one, we cover the loss of gross profit. Okay, gross profit here due to number one, reduction in turnover and also the increased cost of working. Then we have the rate of gross profit, which remember I told you just now, like a company, I declare 40 million underwriting profit. Okay, example like 40%. So we also have this standard turnover. Then we have this word standing charges. Standing charges, which I mentioned to you, those like under the addition basis. And then we also have the savings from the sales, which they generated from another location. And then we also have the annual turnover, and also we have the average gross. Okay, so I highlight all the keywords to you. So just to share with you what exactly it means. Okay, next one. Okay, the word here, loss or gross profit. Okay, number one, we cover due to reduction in turnover. So this turnover, we derive from, example, we compare from the date of loss this year compared to the corresponding period last year. Okay, so if this year, January, let's say January 2026 on fire, and then by April or by May, they are back to normal. So during this 4 months interruption, we will look back from January 2025 to the April 2025, what was the shortfall? Okay, so now if you look at these two figures, the shortfall is like 650,000. We are not paying the 650,000. We are paying the profit that they would have made from the 650,000. Okay, so based on the last year rate of gross profit 20%, that means out of every 1 ringgit they make 20 cents. So out of the 650,000, we are only paying is that 20 cents. Okay, that means the 20% of the 650. Clear? So don't go and tell the client, oh, we pay up to 650,000 for the shortage in turnover. No, we only pay is the gross, is the profit which they would have made from the 650. Okay, that is something like 130 lah. So if we paid out a claim of 130, so this 130, they can use to pay for all the standing charges and so and so. Okay, so that's the claim under Section A, reduction. Okay, next one. Okay, this is Helena. What if all documents are destroyed by fire? How to justify? Okay, if you talk about this document, number one, I'm sure they do have their auditor, right? I'm sure they have auditor, because they need to submit to the income tax and so on, right? So they definitely have this auditor. So even if their own document in their office, everything destroyed, they can always check with the auditor, right? Auditor, I'm sure they would have a record. Okay, so go for auditor. So other than that, other than auditor, if they do have their own maybe accountants, accounts to do their accounting example, so go for accounts. Then the worst come to worst, if really the accountant auditor also located in the same office or burn down, maybe the next alternative go to income tax. Income tax, saya punya file boleh dapat itu file yang saya submit ke. Okay, so, I mean you have to get it. If you don't get it, then the adjuster cannot do anything. Okay, right. So the next one is average. So average, now the sum insured selected is 800,000. So this annual turnover means we look backwards from the date of loss. So let's say the fire happens in January 2026. So if they choose a 12 months IP, we go backwards from January 2026 all the way backwards until maybe January 2025. So that 12 months will determine the total here, annual turnover. So if we go backwards 12 months, is 1.2 million, and the annual gross profit they insure is only 800,000. So that one is definitely underinsured. So we will apply average. So this is the amount payable. Just now was 130, right? So now the after all average is this 86,000. Okay, so this turnover again, if they choose a IP of 18 months, means we go backwards 18 months. Okay, because your sum insured here, I told you, it represents your sum insured represents your indemnity period. You go for 12 months, we take the 12 months gross profit. You go for 24 months, we take 24 months gross profit. Okay, so turnover the same thing. We go backwards 24 months if you choose the 24 months IP. All right. So in order to arrest this under insurance, this one, you remember the upward adjustment that I was telling you. So if you put a 20% upward adjustment, 20% is like 160, right? So 160, still underinsured. We will still apply average. That means, sorry. That means this sum insured is already grossly underinsured. Tak cukup already. So even I put in 20% upward adjustment, only about 900,000, it is still underinsured. So remember, I explained to you, other than 800,000, so maybe I told you, maybe you need to add in 10%, all right, for the increase in trend, 10% maybe for the safety margin, okay, 10% maybe for the growth, example. So if you add in 10, 10, 10, I'm sure that the amount should be enough to cover the sum insured here. You got it? So that's example, you need to add in all the additional 10%. I told you as well, sum insured for con loss, you can over insure, it's okay. Example, if 800,000, after all the 10 you add in, so you put in like 1.5 million, okay, it's fine. Right, so that is your average. Okay, next one. Okay, next. Okay, item 2, loss of gross profit under section B, which is what they call this account, increased cost of working. So this increased cost of working means what? If I spend 10,000 to generate 100,000 of sales, the company will be more than happy, right? Because when you generate sales, the profit that you make from the sales, you can cover the expenses. You know what I mean? You cover all those fixed expenses. Sorry, somebody is speaking. Okay, so if you spend 10,000 to generate 100,000 of sales, so from the sales, the profit you can cover all your fixed expenses, correct? So all those fixed expenses that you pay, that means the insurer don't have to pay anymore, okay? So we will then compensate you the 10,000, all right? So like this case, our friend spent 25,000 to generate 100,000 sales. Okay, but we know that the profit they make is 20 cent every $1, but now they are spending like 25 cent extra, so of course we will limit only to 20%. We pay up to 20,000, no? Clear? You only make 20 cent per dollar, now you're spending like 25 cent per dollar, correct? So we don't pay you 25 cent, we pay you according to your limit, which is 20 lah. Okay, so here 86,000 plus 20, so your amount will come to 10667. So these savings from the sales that you generated, okay, you are able to pay for all your fixed expenses already. So this insurer, then we will deduct this 800 from the savings. So the total claim payable is this one. Okay, 105,867. All right, take note now for con loss. Once the payment is made, your sum insured will be reduced accordingly. So you need to reinstate the sum insured back to original. Okay, you need to reinstate one. Otherwise, sum insured will be reduced accordingly. All right, so that is just to show you the intended meaning of all the wordings in the specification. Faham? All right, so if not, then we come to the last part. Apa yang last kali? Okay, so the last 5 minutes, I think the time is almost okay. The last 5 minutes, is there any questions or anything that I missed out? Maybe you want to repeat your questions. So far, I've addressed most of your questions, yeah. Okay, so kalau tak ada, then we will end the session here. All right, so take note, whatever I shared with you today is very much,